So, very good evening, my dear future auditors. Hope you all are doing really well. Welcome to lecture number 2 of our ACCA AAA syllabus. And before starting with this lecture, I would like to discuss with all of you that what is the agenda of today's lecture, as in what are things we are going to cover in today's lecture that is very important for all of us to understand. Okay, so if I tell you that what we are going to do, first thing that we are going to do is that we are going to complete the pending portion of chapter 1, which is nothing but a small portion of chapter 1. Then we are going to complete the pending portion of chapter 2, money laundering. But in this case, you have to remember that although we have covered a lot of things, almost we have covered the syllabus in full. However, there are certain specific pointers that we just need to refer, that we just need to read once and confirm that whether we understand it or not. Okay, so we'll have a quick reading of 7-8 pages and we will see that whether we understand it or not. And then third thing is that we have to solve questions of chapter 1 and 2. These questions are going to be from the ACCA study hub. However, we will be solving the questions from publishers also, from other reference materials also. However, we will be able to solve it after we complete chapter number 3 and 4 as well, because the questions are given in sections. I hope this is clear. Okay, I hope this is clear. Okay, so now let's quickly start with the pending portion of chapter number 1. So that day we discussed about that what are the main standards and everything. However, there were 5 pointers that were given that we were supposed to read in detail, that we were supposed to understand in detail. So what we will do today is we will understand all those points in detail today. First point is board leadership and company purpose. Second point is division of responsibilities. Then third point is composition, succession and evaluation. Not evaluations, evaluation. Okay, not evaluations, evaluation. Okay, then fourth point is audit, risk and internal control. And fifth point is remuneration. So that is how we are going to sum up our discussion for chapter number 1. So let's have a quick understanding of it. Although we discussed it in detail, however, let us try to cover it via the study text also. So the board should, whenever I say board, what do I mean by it? Whenever I say board, I mean all the directors, okay? All the directors, all the board of directors, okay? Whenever I say board here. So you have to be very particular that what are the responsibilities of the board and what are the responsibilities of the chair, okay? So the board should ensure that the necessary resources are available to meet the company's objectives and measure performance against them. Ensure that the necessary resources are available to meet the company's objective and measure performance against them. We discussed about one of the elements of quality management also, no, that it is engagement resources. So who has the responsibility to make those resources available? The board should have the responsibility. Ensure that the necessary resources are available to meet the company's objectives and measure performance against them. Although that is from the audit point of view, this is from the corporate governance point of view. Now establish the company's purpose, values and strategy aligned with the company's culture. See, this board is at the top level, no? So who has the strategic responsibility of the company, that whether the company is following the right strategy or not, whether the company would be able to follow and achieve their objectives or not. So establish the company's purpose, values and strategy aligned with the company's culture. Now the board should ensure effective engagement with and encourage participation from shareholders and stakeholders, that is maintaining relations. I would summarize it as maintaining relations with stakeholders, Now ensure that workforce policies and practices are consistent with the company's values and supports its long-term success. That is, whatever policies we are following, be it any of the workplace policy, be it any of the cultural policy, whatever it is in consistency with the or alignment with the company's objectives, and via following these policies the company will be able to achieve their objectives. Okay, now the workforce should be able to raise any matters of concern. Now this is very important. You know, one of the core processes in this is also the whistleblower policy, as in if anybody comes to know about anything that is going unethical, then whether they will be able to answer it or not. So you have to provide the hotlines also, you have to provide the email IDs also. Okay, So that is important. Now, division of responsibilities. Do you need to remember these points word by word? No, you need to understand the general theme of it and you can write it. Okay. Now, division of responsibilities, and that is what I am telling about all 5 points, so you don't need to worry about it. Okay. Now, division of responsibilities. So here the chair, it's not board, the chair. Okay, so I'll write it here. Not board, chair, not board. Okay, chair, not board, leads the board. The chair leads the board. That is the chairman. Whenever I say chair here, it means the chairman leads the board. Is responsible for its overall effectiveness in directing the company. That is, the chairman is going to be responsible for the overall direction of the company. Should demonstrate objective judgment. Objective judgment as an unbiased judgment. The chair should have what? Unbiased judgment. The chair should have what? Unbiased judgment, and that is really important. Should promote. Why I am reading these points and telling you the paragraphs and the interpretations? Because whenever you guys read yourself, there might come certain queries, and that is why I am trying to resolve it right now. That whenever you guys study, you should not face any interpretational queries at least. Just in case if you still face, please feel free to reach out to me. Okay. Now, should promote a culture of openness and debate. Do you need to mug up these points word by word? Definitely not. Definitely not. Okay. So don't worry about them. Should promote a culture of openness and debate? No. Okay. Do you need to remember it? No. Do you need to understand it? Yes. Should promote a culture of openness and debate. Do you need to mug it up? No. Do you need to understand the theme of it, that there should be an open environment within the company? Yes. Okay. Facilitates constructive board relations and the effective contribution of all NEDs. What is NEDs? What is NEDs? We have covered multiple times now. What is NEDs? Non-executive directors. Okay. See, these are non-executive directors, so they might not take part, or they will not take part in your overall day-to-day business. So therefore it becomes the responsibility of the chairman to ensure that whether these NEDs are able to represent themselves in the board or not, whether their views are taken seriously or not by the board. Okay. Now, ensure that directors receive accurate, timely and clear information, because directors have the responsibility to manage the overall information, no? So overall business, so they should receive the information on a timely basis so that they can take the actions on an appropriate timeline. Okay. Okay, so if you are available on the chat box, can you please let me know that you are available so that we can interact also here? Yes, if you are available on the chat box, can you please let me know that yes, you will interact also? There's no issue. Okay, now the chair should be independent on appointment. When I say independent, what do I mean by it? When I say independent, what do I mean by it? So I have written it over here. Not an employee for last 5 years. When I say the chairman should be appointed. So the chair should be independent. Who should be independent? The chair should be independent. And by independent, what do I mean? I mean that he or she should not be an employee for last 5 years of the company. No material business relationship in last 3 years. Say, if company is in the business of, say, coaching industry, and they purchase the desk and they create their app and website through this person, okay, then this person should not be the chairman, because he or she has a strong relationship with the company last 3 years. Okay, and then not a significant shareholders. Even if this person is a significant shareholder, then his or her judgment could be biased, and that is why it is really important for us. Okay, now there should be a clear division of responsibilities between the chair and the executive leadership of the company's business. There should be a clear division of responsibilities between the chair and the executive leadership. When I say chair, it means the chairman. When I say executive leadership, it means the executive directors, whosoever has the responsibility of day-to-day business, of managing the day-to-day business of the company. I hope this is clear. Now, composition, succession and evaluation. Okay, composition, succession and evaluation. So, majority of members of nomination committee should be NEDs. What is this nomination committee? So, generally there is one more committee inside a company which is called as NRC. This NRC stands for nomination and remuneration. That is, who would be nominated at what position, at what committee, and what would be the remuneration that would be paid to them. It is taken care of by this committee. Okay, it is also created under corporate governance, just like audit committee. Okay, should be NEDs. A majority of members of nomination committee should be NEDs. That is, if they have, say, 5 members, then at least 3. If they have 4 members, then at least again 3, since majority should be there. If they have 6, then at least 4, right? So that is important here. Okay. Okay. Now, all directors should be subject to annual re-election. That is, there shall not be any director who is appointed for say 5 years straight, 10 years straight, 15 years straight, 20 years straight. What should happen is that they should be re-elected every year, re-elected, because there would be a criteria of evaluation, there would be a criteria of succession, and by following that we will decide whether this director should hold the position the next year or not. So all directors should be subject to annual re-election. Okay. Now the chair should not remain in the post for more than 9 years. The chair should not remain in the post for more than 9 years. Now this is important. The chairman should not be there for more than 9 years. Now, do you need to remember this? Yes. Do you need to remember this? Yes. Do you need to remember this? Yes. Okay. So these are the points that you need to remember. However, I'll still not say that you need to remember word by word. You need to understand it. Why the chair should not remain in the post for more than 9 years? Because what happens is, if the chairman is there for long period, then he or she may get biased, and therefore it is mentioned over here that they cannot remain in the chair for more than 9 years. Appointments and succession plans should be based on merit and objective criteria and promote diversity, inclusion and equal opportunity. Again written, appointments and succession plans. Appointments and succession plans of directors should be based on merit, that is the qualifications and experience, the qualification, experience and performance. Okay. And objective criteria means what? Unbiased. It should not happen that somebody is a relative of the past chairman, so he or she is becoming the chairman. Objective criteria. And promote, whosoever becomes the chairman should promote diversity, inclusion and equal opportunity for everybody. Okay, that is something that they should promote. If they are not promoting it, then they are not fit to become the chair. Now, an annual evaluation, this is important. Annual evaluation, we have discussed no annual re-election. Similarly, annual evaluation happens. Okay, based on that the election would happen, the re-election would happen. An annual evaluation of the board should consider its performance, composition, diversity, and how effectively members work together to achieve the objectives. This is important for all of us. With this, we have covered it. But what you need to remember here? You need to remember these 3 points here. Now, audit, risk, and internal control. The board should, again, who has the responsibility here? The board should. Okay, the board should establish formal and transparent policies and procedures to ensure the independence and effectiveness of internal and external audit functions. Independent. We have already discussed about in our basics lecture, which is lecture number 1, that what is the importance of an auditor being independent, because if the auditor is not independent, especially the external auditor, then the whole process of audit will become a little vague, right? So that is why it is really important for us to understand that who has the responsibility to maintain that auditors are independent? The board. Okay, although board could also delegate certain part of their responsibilities to whom? To the audit committee. So audit committee ensures in this particular case that the independent auditors are actually independent or not. And internal auditors can be independent, but generally they might not be independent also. Okay, because these can be internal people also. Now, satisfy itself. The board should satisfy itself on the integrity of financial and narrative statements. Generally, this responsibility is also delegated to the audit committee. So generally these responsibilities, however, why it is not mentioned over here? Because in the companies where audit committee is not there, say in other than listed companies, then the board takes care of these things. That is why it is mentioned over here. So generally these responsibilities are delegated to audit committee instead of writing in case of listed companies, I would write wherever applicable. Okay, so that if any other company also has the audit committee, it would be delegated to them. Now, present a fair, balanced and understandable assessment of the company's position and prospects. Again, this responsibility is delegated to audit committee. Establish and maintain an effective risk management and internal control framework. We have already discussed in chapter number 1. then determine the nature and extent of the principal risk the company is willing to take in order to achieve its long-term strategic objective. Now this is something new, that determine the nature and extent of the principal risk the company is willing to take. So this is related to risk. However, this is also risk identification and assessment. However, this is also related to what? Related to the audit committee only. However, this is a little new point, that is why I mentioned it. Now the last point for chapter number 1 is remuneration. So remuneration policies should be designed to support strategy and promote long-term success through a remuneration committee. What is this remuneration committee? We have already discussed it, NRC, nomination remuneration committee, no? So that is remuneration committee. It is just being mentioned in two parts, nomination and remuneration. Okay, so remuneration policy should be designed to support strategy and promote long-term success through a remuneration committee, because remuneration should not just be decided on an ad hoc basis that Mr. A deserves 1 crore, Mr. B deserves 2 crore. It should not happen. It should be determined on the evaluation, on the basis of an evaluation, and that should be an objective evaluation via remuneration committee. Now, no director should be involved. No director should be involved in deciding their own remuneration outcome. Of course, if there's a meeting going on to decide the remuneration of say Mr. A, then Mr. A should not attend that meeting, right? Definitely, because Mr. A's remuneration is going to be decided as an agenda. Okay, so he or she should not be able to vote in that particular agenda. So with this, we have completed everything about chapter number 1. If there are any questions, please feel free to let me know. If there are any questions, please feel free to let me know. If there are any questions, please feel free to let me know. I am allowing you a time of 1 minute. Please let me know if there are any questions, okay? If there are any questions, please feel free to write on the chat box. Okay, so you are saying, can we say this as salary? So you are talking about the remuneration part. Yes, you can call it as salary, but why it is not called as salary here, I'll tell you. Because there are certain non-executive directors also who do not get any salary, but they get the remuneration in the form of say sitting fees, right? So that is why it is called as the remuneration here. But please do not write. You can understand it as salary, but please do not write it as salary. Okay? Okay? Understood this? Understood this? Yes, please confirm the chat box. If you have any queries, we will be able to discuss, not an issue. Yes. Okay, so I hope there are no queries now. Just in case if you have any queries, please feel free to write on the chat box. That there is not an issue. Okay, now my friends, we have already completed some portion of chapter number 2, and today we are going to go for the remaining portion, and then we are going to go for the questions. Okay, so before I move to the remaining portion, let us have a quick understanding of what we have covered so far. So we covered chapter number 2, money laundering. We covered the definition part. Although this was a simple definition, today we are going to cover the definition in core. Okay, so today we are going to cover the definition in core. But before that, if I tell you that whether you have covered all of these objectives or not, so let's just evaluate of chapter number 1 first, that whether we have covered all the objectives or not. Okay, just in case if it is the remaining, we'll cover. So explain the need for laws and regulations, standards and other guidelines related to audit assurance related services. Yes, we have discussed about multiple committees over here. We have discussed about multiple committees over here, multiple standard setters over here. Then outline and explain the need for the legal and regulatory framework, including public oversight of audit and assurance. Yes, we have discussed about PIOB and PCAOB. The impact of corporate governance principles on audit and assurance. Yes, we have specifically had a heading of impact of corporate governance on audit and assurance. So we have covered this objective also. Discuss the role of the audit committee and its impact on audit and assurance practice in relation to the relationship with the external auditor and the oversight and approval of provision of non-audit services. Have we discussed it? Yes, we have discussed this yesterday in our audit committee discussion. Plus we have discussed a lot of new things today, so that makes our discussion very whole, and everything we have covered. See, this is the discussion that we did for audit committee yesterday. Okay, if by chance anybody has not attended that session, what you can do is you can quickly go and attend that session as well after the completion of this session. Okay, now when I say chapter number 2, so what we have covered so far in chapter number 2, let me tell you that. Okay, so when I say chapter number 2, money laundering, so what we have covered the definition, okay, which is a basic definition. Today we will be covering a detailed definition also. Then principal offenses, so we discussed about laundering, failure to report suspicion and tipping off. Okay, then we discussed about stages of laundering, and then we discussed about stages of laundering. So generally there are 3 stages of laundering: placement, layering and integration. There would be multiple examples of it, okay, that we have already covered. Okay, but generally speaking, what is placement? When the money first enters the financial system. Okay, when we will be solving the question, we will be identifying a lot of new items and we will be adding it over here. Then layering, that is converting that illegitimate money into multiple layers so as to make it difficult to identify the true origin. Okay, then integration as in when that money comes back to the economy in the form of a legal money, okay, or legitimate money. Then failure to report suspicion, so we discussed about that there are 3 principal offenses. One is laundering, another one is failure to report suspicion, third one is tipping off. So this was laundering. Then failure to report suspicion, because everybody is legally obligated to report any suspicion to FIU in the form of SAR. SAR is suspicious activity report. Now, suspicion report should include reporting businesses' full name, identification of suspicious parties, suspicious transaction details and suspicious property details also. Then we discussed about tipping off. So what is tipping off? Disclosing about an ongoing or potential investigation to whom? To any of the third parties, however, especially to the party against whom the investigation is going to happen. But even if you disclose it to third party, is it tipping off? Yes. Now, risk associated with money laundering. So there are fines and penalties, there might be loss of reputation and there might be imprisonment also. Then general defenses. Intention to report existed, but there was a reasonable excuse to not report. See my friends, these notes are meant to summarize your content. Okay, that is why I have not exactly copy pasted it from somewhere, or I have not taken the whole of the context and made it like a book only, because these are supposed to have your revision or to support you in your revisions. Okay, so what you need to do is, after this also, okay, you need to go to the study hub, just read it once so that you get the understanding of everything. Just in case if you face any difficulty, please feel free to reach out to me. Okay, now how will you reach out to me? Let me quickly tell you that how you can reach out to me so that you are aware about that also. So how you can reach out to me? If you want to reach out to me, you can reach out to me via any of these mediums. Okay, you can reach out to me via any of these mediums that are written over here. So on YouTube and Insta, I am available by the name of ACCA with CA Supreet Agrawal. On LinkedIn, I am available by the name of CA Supreet Agrawal. On Telegram, there's a channel which is ACCA with CA Supreet Agrawal, and my courses would be available on www.bbvirtualsglobal.com. Okay, this is bbvirtualsglobal.com. And will you get the access of the notes? Yes. Will you get the board notes? Board notes as in whatever we are writing? Yes. Will you get the question banks? Yes. Will you get the board notes of the question banks? Yes. All in the soft copies. Okay. Now, What are the general defenses that could be there? So intention to report existed, but there was a reasonable cause of not doing so, or responsible party, that is the person who has done the offense, has acted in good faith, and report has already been submitted to MLRO. What is MLRO? Money Laundering Reporting Officer. We will be having a good discussion about MLRO also in detail today. Although we had a quick discussion yesterday that what is MLRO? Any person who is responsible for overseeing the organization's anti-money laundering activities and terrorist financing activities or compliance efforts are known as money laundering reporting officer. But today we will have a good discussion about it. Now, how to prevent money laundering? How to prevent money laundering? So we should establish AML culture. AML culture as in anti-money laundering culture. So does it happen that money laundering is happening because we are promoting it? No, no, no. I'm not saying so that money laundering is happening because we are promoting it. But if we stop promoting it, or if we actually protest against it, then it might definitely reduce. Okay, so we have to take active efforts from our end to reduce the impact of money laundering or to reduce the practice of money laundering. That is what I am trying to say over here. Okay, now so establish AML culture, which is anti-money laundering. Then appointment of MLRO. Appointment of MLRO. When I say appointment of MLRO, then that is given below, and we will be having a good discussion about it as well. Then designate key person for risk management. When I say designate key person for risk management, what do I mean by it? That is, you should not just make anybody risk manager of your company. What happens is, risk management is a big responsibility. It needs discussion with top level people also, lower level people also. It might need to get certain information from everybody, and therefore the risk manager of the company or the head of the risk management should be a very, very powerful and key person of the organization, so that he or she can access the records, he or she can take the decisions on the behalf of the company. Okay, that is why it should be a key person. Then implement systems for verification and record keeping, that is CDD. What happens is, we will be having a good discussion about CDD also today. Okay, I have drafted everything from the context, also from the ACCA study up also, so that we can cover everything for the exam plus the understanding. So this file is majorly meant to cover your understanding, but today we are going to have a little detailed discussion about it also. So implement systems for verification and record keeping, that is, when I say CDD, what is it? It's client due diligence. So what should be the system of KYCs and retaining of record, retaining those records, that is something that we are going to study today. Okay, then staff education training. You should continuously educate and train your staff for the purpose of identifying the money laundering transactions, being alert towards the money laundering transactions, and how to take actions once they suspect anything. That is very, very important over here. Then when CDD should be done? When establishing a business relationship and when suspecting money laundering. We will have again a quick discussion about it. What are certain examples of suspicious transactions? So usually large cash deposits, high value transactions with unknown parties, transactions inconsistent with normal business patterns, and money laundering reporting officer, MLRO, so responsible for overseeing the organization's anti-money laundering and counter-terrorism financing compliance efforts. That is important. Okay, now today we are going to go for the official discussion of money laundering ones. Okay, so we are going to go for the official discussion of money laundering ones over here. Now before I move further, what I need to do is, I need to ask you if we understand the objectives of the chapters or not. This is very important. See, whenever we start any chapter, what we have to see is whether we understand the objectives of that chapter or not. If we do not understand the objectives of that chapter, we have to first of all understand that what that chapter is trying to teach us, and that is really, really important also. And once we get the understanding of it, then we can say that yes, the chapter is understandable for us and the objectives are clear to us, and then we are starting our studies, because you do not need to just mug up the context, or you do not just need to mug up the text of the syllabus. What you need to do is, you also need to understand that what the syllabus is trying to tell you. Okay, so now let's quickly go to the objectives part first. So in money laundering, define money laundering. That is, money laundering needs to be defined first, and discuss international methods for combating money laundering. Combating as in combating could mean eliminating, facing, mitigating. Okay, all of these are little synonym words. Then explain what? Explain the scope of criminal offenses of money laundering. Explain the scope of criminal offenses of money laundering, and how professional accountants may be protected from criminal and civil liability. Scope of criminal offenses, that is, what could be considered as money laundering, what could be considered as money laundering, what could be considered as offenses. So we discussed, no, tipping off, failure to report suspicion, what could be considered as offenses of money laundering, and how professional accountants may be protected. So what are the responsibilities? Okay, that is how we can be protected. If we just report, if we just do the SAR reporting. Then explain the need for ethical guidance in this area. What is the need for ethical guidance? When I say ethical guidance, so what is the need for ethical guidance? That is why there should be a ethical guidance discussing about the impact of money laundering. Then describe how accountants meet their obligations to help prevent and detect money laundering, including record keeping and report of suspicion to the appropriate regulatory authority. This record keeping would be in the form of KYC or CDD, and this reporting of suspicion would be in the form of SAR, that is suspicious activity report. Okay, that is something that we are going to discuss. Then explain the importance of CDD, also referred to as KYC, and recommend the information which should be gathered as part of CDD and KYC. So what information we need to collect. Okay, that is, it's not just when we need to collect, what information we need to collect, that is also something we need to be sure about. Okay, so which should be gathered, recommend the information also, that is important. That is why objective should be clear, recommend the information also. So here importance of CDD and recommend the information that needs to be gathered. Then recognize potentially suspicious transactions and assess their impact on reporting duties, that is whether you need to report, that is identify and evaluate if you need to report. Then describe the basic elements of AML program. Describe the basic elements of AML program. What is this AML program? What is this AML program? This is anti-money laundering program. Okay, my friends, we are going to take roughly 30 to 35 minutes to cover all of this content today. Okay, however, I would like to ask you here, do you need a break now or we can take it later? What do you say? Do you need a break now or we can take later also? Do you need a break now or we can take later also? What do you say? Do you need to take a break now? Because for half an hour we will not be able to take a break. So if you want, we can take a 2 minutes break and then move forward. What do you say? What do you say? Because I'll need your interaction here. Okay, I'll need your interaction over here, otherwise this will become a little difficult for us to discuss about. Okay, so I want all of your interaction also. So I'm asking you, please tell me, do we need a 2 minutes break here? A small 2 minutes break? Okay, so let's take a 2 minutes break. Okay, just a 2 minutes break, and then we will start, and then we will complete this money laundering, and then we will take a 10 minutes break. Okay, so just a quick 2 minutes break. Okay, so I hope that is done. Now we can come back. Okay, so I hope that is done. Now we can come back. Okay, so now let's start with money laundering again. Okay, so we'll take roughly 30-35 minutes to cover this money laundering, and once we are done with it, we will take a 10 minutes break, and then we will go for the questions of chapter number 1 and 2. Okay, so money laundering, the process by which criminals attempt to conceal the true origin. Did we study it? Yes, conceal the true origin. Okay, conceal as in hide the true origin. Okay, and ownership as in the property, of the proceeds of their criminal activity, proceeds as in money. Okay, allowing them to maintain control over the proceeds and ultimately providing a legitimate cover for the sources of income. Okay, tell me something, did you ever hear this thing that a lot of people has done what? They have reported their property in the name of somebody else. Okay, in India we developed a lot of policies also, the government developed a lot of policies also asking people to disclose their properties, disclose in the name of somebody else, so that, and they said that, you know, you pay us a certain sum of money or certain percentage of that particular black money, and then you can take it as the white money and we will not tax it further. Okay, so there was, I think, somewhat the tax of 35 to 40%. Government said that once you pay it, that property will become legitimate and we will not ask for any more tax or penalties on that. Okay, so there was a scheme few years back regarding that. So ownership of the proceeds of their criminal activity, allowing them to maintain control. This is important. Allowing them to maintain control over the proceeds. Okay, now please understand this one thing. Which definition do you need to understand? That one that we studied yesterday or this one? So I'll suggest that if you remember this one, this will be a better one. Why so? That was sufficient for the purpose of understanding. See, if I tell you everything in one go, see, there is inclusion, there it also includes and everything. So you might think that money laundering is a very big topic. So what I did, I just told you certain basic terms of the money laundering and I explained it to you. But today I am telling you it in detail. So if you have a choice, you should remember this one. Okay, I am just making it a little clear now. Okay, now include, what it includes. So although I'll be sharing both, no, don't worry, both are correct, but I'll suggest that you remember this one. Okay, include possessing as in, even if you are not the owner of it, if you just possess the property, that is, it is just in your custody, then also it would be considered as you are the money launderer. Or in any way dealing with or concealing, that is, in any way if you are dealing, say you do not, it is not your money, the person who is paying is not your person, the person is not you, or the person who is receiving is not you, that is, you are nowhere related. However, you are just providing a brokerage service in this transaction, that is, you will facilitate the transaction and you will charge say 1% of the amount. Okay, in this particular case you are also dealing with that money, no? So in that particular case you will also become the money launderer. Okay, the scope is so wide of money laundering that everything is covered, almost everything gets covered over here. Okay, that is important. Now the proceeds of any crime is called as criminal property. It also includes an attempt or conspiracy to commit such an offense, conspiracy to commit such an offense, that is, even if you have not committed it, you were just about to commit it or you were just conspiring. Attempt or conspiracy, that is not actually attempted, but were trying or planning to, then also you will be called as the money launderer here. Okay, then aiding, abetting, counseling or procuring. Aiding, helping; abetting, in Hindi we call it as uksana, right? Counseling or procuring the commission of such an offense, that would also be called as money laundering. An act which would constitute any of these offenses, that is, if you are doing any related act, just the facilitation part also, then also it would be called as money laundering. Counseling, procuring the commission of such an offense, that is, once it is happening, you are helping the transaction to happen. Or an act which would constitute any of these offenses, that is, you are doing any of the related activity. Everything is covered over here. Now, so did you understand what is the scope of money laundering? It's so big, right? Yesterday we just discussed about possessing, right, dealing in, but here there's a lot of scope. There's a big scope of money laundering. Now, criminal property includes money, securities, and tangible and intangible property. See, this criminal property that we are discussing about, this could be in the form of money, that is the cash money or the bank money. This could be in the form of security. Sometimes it is traded in the form of shares, debentures, bonds, everything. Or it could be some tangible and intangible property also. You might have seen sometimes you might have seen in movies that diamonds are used, right? Sometimes real estate properties are used, land is used. So all of these things would constitute the property here. That is, criminal property includes money, securities, tangible and intangible. Okay, I'll just write one example. So money does not need any example. Securities, example, stocks, bonds, etc. Okay, tangible could be, example, diamonds, jewelries. Intangible could be land. Okay, I hope this is clear. Now, FATF, we have already discussed some portion of FATF, but what is FATF? Okay, this is a little technical discussion. Now, what is FATF? So FATF is Financial Action Task Force. This organization is created under IFAC, okay, International Federation for Accountants. This committee is created, and the purpose of this committee is to combat money laundering. When I say combat money laundering, what is the meaning of it? The meaning of combat money laundering is that they should take active efforts in identifying the money laundering transaction and eliminate it. Okay, so the full form is Financial Action Task Force, FATF. Purpose is to develop and promote national and international policies. We have discussed in a little bit during our chapter number 1 when we were discussing about regulatory bodies, right? But here we are going to have a core discussion about it. So the core discussion is, purpose is to develop and promote national and international policies to combat money laundering and terrorist financing. The recommendations of FATF includes the scope of the criminal offense of money laundering. That is, what is the scope of money laundering? Do you need to remember mug these things up? No. Scope of the criminal offense. Then measures. See, my friends, when we will go for the ACCA answers, okay, for example, today we are going to solve 2-3 questions, at least 3 questions we will be solving, 2 to 3 questions, okay. You will see that the answers are not such that you need to mug up and write everything, okay. Today we might be solving certain case studies which are very, very direct, okay. But when I tell you that what is the content of the case study, which is generally asked for 50 marks, then that generally comes from the planning stage that we will be covering, say, 2 weeks from now, okay. Now when I say that you need to complete you need to attempt those 50 marks questions, I'll tell you that you do not need to mug up anything. You need to understand the context of the case study. You need to mention the right points. You need to identify the right risk, the right evaluations, and then you will be sorted. Okay. So please do not waste your time in mugging up everything. You should definitely know that what FATF does. FATF defines the scope. Okay, scope of money laundering or criminal activities. But you do not need to sit and mug this thing up. The recommendations include the scope of the criminal offense of money laundering, measures to be taken by financial institutions. No. So what FATF does, it defines the scope. It sees that what are the responsibilities of various organizations. Even if you don't remember institutions and non-financial business, that is okay. Okay, you do not need to mug these things up. Now, measures to be taken by financial institutions in non-financial businesses and professions. Again, transparency and beneficial ownership of legal persons and arrangement. Transparency and beneficial ownership of legal persons and arrangements. They have to recommend international cooperation, including mutual legal assistance and extradition. That is, let's discuss about these two points. So recommendations include transparency and beneficial ownership of legal persons and arrangements. That is, what are the kind of transactions that are going on, what are legitimate, what are illegitimate. Sometimes the real owner is different, the beneficial owner is different. You might have seen that a lot of businessmen reports their income, reports their assets in the name of their people who are working for them. So that they do just to hide the true source or true ownership or true origin of that particular asset. So similarly, FATF recognizes these transactions and see if the person who is the beneficial owner is actually the beneficial owner, or he or she is just being used for the purpose of hiding the true origin or ownership of the company. Then international cooperation, including mutual legal assistance and extradition. So what they do is, FATF is an international organization, so it does not just work in UK or just one country. What it does is, it works in multiple countries. It actually works with multiple countries and try to develop policies, because in case of money laundering, generally multiple countries are involved, right? So they try to do what? They try to evaluate the policies, they try to define the policies in such a manner that money laundering could stop for multiple nations together. So they work with international organizations also. So they ask and they give international cooperation, including mutual legal assistance also sometimes. Say if somebody has done the money laundering in India and went to say UK, so FATF might help you to extradite that particular person. Extradition means that that person is transferred from that country to this country for the purpose of legal affairs. Okay, now I think this is a little mistake over here, so you can ignore it, not an issue. Now need for ethical guidance. When I say need for ethical guidance, so we discussed in one of the objectives, no, that there's a strong need for ethical guidance in this area. There's a strong need of ethical guidance in this area. So ethical guidance is needed because the scope of money laundering offenses is wide. See, what is money laundering, what is not? There is a very big scope. For example, if I ask you today that you suspect any transaction to be money laundering, you do not have the evidences, should you report it? So you might also ask me that I am not sure whether I should report it or not. What do you think, right? So we should always try to understand this, that whenever we are unable to take the decision legally, what we should do is we should knock the door of ethics. Okay, if it is ethical, if it is in the public interest to report that information, then you should. If it is not in the public interest, then you shouldn't. Okay, so that is why it is really important for you to evaluate that ethics are important even here, even in money laundering. So what is the need? The scope of money laundering is wide, so it becomes little ethical dilemma also sometimes, that whether we should report it or not, because a lot of things are not clearly defined whether it is money laundering or not. However, it is money laundering. Say suspicion. Okay, suspicion is not at all defined in any text. Suspicion is not at all defined. When I say suspicion, it is a personal feeling, right? Whether you suspect it or not. So ethics will help you decide that whether this suspicion looks true or not. Okay. Now failure to comply with detailed provision could have serious consequences. Failure to comply with detailed provision could have serious consequences. That is, even if you consider it as a normal thing that we do not have the evidences and that is why we are not reporting as general public, and then tomorrow if it is found out that you were aware about it and the case would also be registered against you, then you will not be able to do anything. So failure to comply with detailed provision could have serious consequences, and that is why there should be an ethical guidance over here, that what should be reported, what should not be reported, when it should be reported, when it should not be reported. Then professional judgment must be exercised to meet reporting requirements. When I say no, SAR, okay, suspicious activity report, you should meet your professional judgment, that is whether you need to report it or not professionally, because there might be certain scenarios when you report on a true basis, in a good faith. However, the client might come to you and say that you have actually breached confidentiality. Okay, this information was made aware to you in a confidential manner. However, you went and disclosed this to the regulatory authorities. So now we are going to put up a case against you, legal case against you, where we are going to claim that you have breached the confidentiality with your client. Okay. And finally, disclosure requirements may conflict with the fundamental principles of confidentiality that we have just discussed. Okay. So that is why there is a need for ethical guidance. Do you need to remember this? I would suggest yes. You should remember this. Why? Not directly from the exam point of view, but if you remember this, it will help you in writing multiple answers across AAA, and that is why I'll suggest that if you write it, it would be very beneficial for all of us. Okay. Now liability. Who would be liable? Because ultimately everything burns down to the liability. If we are liable, we will report. If we are not liable, then who cares, right? Sometimes that happens. So liability. All partners. Okay. In a practice, and directors also. So they have covered the directors also. Directors just below the level of partner in a firm are potentially liable on a joint and several basis. When I say joint and several basis, that is, they all are liable together, plus they all are liable separately also. Okay, so one is liable for the acts of another also, and one is liable for their own acts also. And for breaches of the firm's obligation, that is, if the firm has not performed its obligation and there is a liability, all partners, directors are jointly and severally responsible. I hope this is clear. What do you say? Yes, what do you say? What do you say? Okay, now all individuals are liable. All individuals are liable for obligations related to their respective breaches. That is, if anybody has breached anything themselves, then they would be liable for that. However, will the partners be liable? Yes, if it is from the firm's point of view. However, if one particular person has breached, then that person would be liable for himself. However, if it is a firm, all partners and directors are jointly severally liable. Okay, so this is individuals. Okay, this is firm. Okay, okay, I hope this is clear. So I'll quickly write it here. Breach by firm. Breach by an individual. Okay, I hope this is clear. I hope this is clear. Okay, I hope this is clear. Yes. Okay, okay, okay. Amazing, amazing, amazing. Okay, now professional accountants will not be in breach. This is important sentence. That is why I have written in green club plus a star marked it also. Professional accountants will not be in breach of any professional duty of confidence. Confidence as in confidentiality. The word is correct, but I'll just write it over here so that you understand it later on. That is confidentiality. That is, the professional accountants will not be considered in breach of confidentiality if they report in good faith any money laundering knowledge or suspicious to the appropriate authority with reasonable grounds for suspicion. But there should be reasonable grounds for suspicion. Okay, you cannot just go and report it. Okay, what you need to do is there should be reasonable grounds, and once you have the reasonable grounds, then nobody is saying that you are wrong over here. I hope this is clear. Please let me know in the chat box. I hope this is clear. Please let me know in the chat box. I hope this is clear. Please let me know in the chat box. Yes, I hope this is clear. Please let me know in the chat box. Yes, I hope this is clear. Please let me know in the chat box. Yes. Please ignore the timelines and date stamped over there. I don't know why it always comes at 9:41 a.m. You can check any of the timeline of the lecture. It will be 9:41 a.m. Okay. The date is going to be Tuesday 9th Jan only. I don't know why. Okay. I don't know why. I need to change it. I'll try changing it. Okay. Otherwise, that is just how it is. Okay. Okay. Yes. Tell me. Any questions? Any discussion so far? No. Now legal privilege. Legal privilege. What is this legal privilege? I'll tell you. Before I read it, let me explain what is legal privilege. Okay. Before I read it, let me tell you what is legal privilege. Have you heard of attorney-client privilege? Attorney-client privilege. That is whatever you disclose to your lawyers in good faith as part of the assignment, they cannot use it against you. Okay, because that is privileged by attorney-client privilege. Is there anything related to accountant's client privilege? Let's discuss about it. Okay, so that is given over here. When I say legal privilege, whether that privilege is available. So the right of an individual or entity to consult lawyers about their legal position and to have the privacy of those consultations respected, that is called as legal privilege. That is the attorney-client privilege. Example, attorney-client privilege. That is attorney-client privilege. Whatever they have used, you cannot disclose it as an attorney, or you cannot use it against them later on also. So legal privilege does not apply to discussion between professional accountants and clients. Very, very important sentence. Does not apply to professional accountants and clients. That is, you can disclose. Accountants must report all suspicions of money laundering. Okay, but when I say that this clause does not apply, legal privilege does not apply, it just means that there is no professional accountant to client privilege. Okay, however, you cannot just go and disclose anything. There is a code of ethics which includes confidentiality also. So what do you need to do? You need to evaluate if whatever you are disclosing is a breach of confidentiality or your duty as a professional accountant. If it is in the public interest, and if you feel that there is a strong reason, strong ground, strong evidences to report it, then you should do it. Okay, there is no legal privilege that client could throw at you that, you know, we were not supposed to report it to you. Okay, so I hope this is clear. Okay, Now, money laundering reporting officer, money laundering reporting officer, money laundering reporting officer, MLRO, money laundering reporting officer, MLRO, money laundering reporting officer, MLRO. Okay, although we have had a discussion about it yesterday, but we'll have a quick discussion about him today also. So the MLRO should have a suitable level of seniority and experience. Why? Because this person needs to take care of the money laundering offences. This person needs to evaluate if the money laundering practices or the anti-money laundering practices or terrorist financing is happening or not, and what are the procedures and whether they are being followed or not. Now, when this person needs to do this, don't you think this person needs certain authority, certain power? That is why that person should be have of seniority and experience. Otherwise, that person might not just be able to understand also that what is going on. The MLRO is responsible for considering internal reports of money laundering. The MLRO is responsible for considering internal reports of money laundering. That is, if there is a whistleblower or if there is any internal reporting of money laundering against the company, then this person should evaluate it, that whether it has merits or not. Then deciding if there are sufficient grounds for suspicion. If there are sufficient grounds, then they should say that, you know, we are going to launch an investigation or we are going to evaluate this matter. Okay. Then preparing SARs. What is SARs? Suspicious activity report. Suspicion activity report, SAR. Okay, we'll generally call it as SAR now. Then liasoning as in working together or meeting, okay, with the authorities on consent and disclosure issues. That is, whether it would be in the good faith to report it, and if we report it, that what are the disclosures that are required and whether we are fulfilling that or not. Now the MLRO may take responsibility for training the firm's employees in AML and SAR. That is, MLRO could actually take this responsibility that they will train the employees. So you'll see in a lot of corporates there is a training that goes around for anti-money laundering, okay, or terrorist financing. Now, you know, I've seen a funny instance here that employees generally ask that why are we being trained about it? What is the use of it? Why are we being trained? So that is why, because MLRO decided that everybody should be aware about anti-money laundering and terrorist financing issues. Then, and how do they need to report it? Because today if I tell you that you have to report any instance of money laundering, do you know where you will find the suspicious activity report? Maybe not, right? So that is why the format and everything is made available in this training. Advising how to guard against the risk of tipping off or prejudicing an investigation. That is, advising how to guard against the risk of tipping off. That is, you do not end up tipping off. The MLRO could provide the training also and could take the responsibility also. And prejudicing an investigation, because if there is an investigation going on and if you end up tipping off, then first of all you will be considered as the money launderer. You also you will be considered as the principal offender. Also, it will prejudice the investigation. So, and the design and implementation of internal AML systems and procedures. Just like internal controls, there are internal controls for anti-money laundering and terrorist financing also. This MLRO takes responsibility for that. That is the job, right? That is the job of that particular person. Okay, I hope it is clear. Any questions so far? Please let me know. Any questions so far? Please let me know. Any questions so far? Please let me know. Any questions? Any questions? Yes, any questions? Yes, any questions? Yes, any questions that you would like to tell me? Any questions? If you have any questions, please feel free to ask. If you have any questions, please feel free to ask. Okay, I don't think so there's any question. Okay, then record keeping. Now this record keeping is what? This record keeping is generally for money laundering and the KYC, and you might have seen that banks save your information after some time also. That is, once you have ended the relationship, after some years also they might save the information. So it is all about that. All client identification as in KYC, identification as in KYC. Okay, details of all business relationships and transactions. That is, details of what? Of types and transactions. Types as in whether they were a savings account holder or a current account holder or an OD holder or what. and details of monitoring the relationship must be maintained. That is, how did the monitoring happen? How did the monitoring happen? That is, how did the monitoring happen if there is any suspicious activity or not. You know, there's a very funny incident that happened with me. So one of my students were facing difficulty in processing the payments and international payments for the purpose of exam booking only. Okay, once. Now he or she reached out to me, and I immediately helped him or her via my card. Okay. Now when I helped her via my card, what happened was that I received a call from my bank asking it that, so whether it is a suspicious transaction, because you have made a big amount, you have made a big transaction in the foreign currency which you have not generally done in so far. So what is the reason? So I told them that, you know, I have actually made a payment to an institution for one of my students, and that is the case. And they said, okay sir, okay, if it is approved by you, we do not have any issue. If it is paid to a legitimate organization, we do not have any issue. But do you think this call would have been recorded and would have been saved in the records? Yes, because tomorrow if there is an instance of money laundering, they will be able to show it, they will be able to disclose it that we confirmed with the party and they told us the reasons which looked legitimate, and that is why we did not launch an investigation. Okay, must be kept, sorry, must be, okay, must be kept in a readily retrieval as in it could be retrieved anytime, retrieved and then bring back to the system for the purpose of understanding. So it could be retrieved anytime, just like we upload certain documents on Google Drive, no? So it is in the retrieval format. We can download it anytime, we can refer it for a period of at least 5 years following the completion of the last transaction or at the end of the business relationship with that client. So 5 years, at least 5 years following the completion of the last transaction or at the end of the business relationship with that client. So let me give you an example over here. So if last transaction was on 31st March 25, relationship ended, that is account closed. Okay, I'll write it that way. Account closed on 30th June 25, then record needs to be maintained. Record needs to be maintained up to 30th June 30 or 31st March 30. What do you say? What do you say? So it's 30th June 30. That is either 5 years from the last transaction date or from the date of ending of relationship. If after the ending of relationship there has been a transaction, then we'll take that. Otherwise, generally from the ending of the relationship. So let's read it again. Must be kept in a readily retrievable form for a period of at least 5 years following the completion of the last transaction or at the end of the business relationship with that client. But this is for transaction. This is for what? Transaction. Okay, this is for the transaction. Okay. Thank you so much, Christopher. Thank you so much for the detailed explanation. Please do you do this every day? So I'll tell you this is our class which is going to be conducted on YouTube live for this session. However, this session is conducted on YouTube live. However, more of our sessions would be available for buying at www.bbvirtualsglobal.com bbvirtualsglobal.com. Okay, you can also refer the numbers that are available on the description box, or you can reach out to me on my Instagram or YouTube, and you can call it as ACCA with CA Supreet Agrawal, and you can reach out to me for further lectures. I would suggest you to subscribe to that channel, ACCA with CA Supreet Agrawal. Okay, on Telegram I am available by the name of CA Supreet Agrawal. Okay, however, the lectures are going to be in full English, so you will get the understanding, and I would love to see you in the session also. Okay, will you get the notes? So these notes are provided as part of your classes. Okay, however, if you need the notes, you can talk to our team and they will be able to provide you the notes as well. Okay, that is not an issue. Okay. Now, so this was for the transaction. Every transaction detail must be maintained at least for 5 years from the last transaction date or from the ending of the relationship, from the date that relationship ended. Now, must be retained, must be retained throughout the period of the relationship and for 5 years after termination of the relationship. What? Client verification records. What is client verification records? That is KYC. All the KYC, the information that you have verified from the client, you should be able to keep it to you throughout the period of the relationship and for 5 years after the ending of the relationship. Okay. All external, internal reports and actions, that is whatever reports have been made, in this case this report was made internally, okay, so whatever report has been made, whatever action has been taken, the call that they made to me, everything must be kept for at least 5 years from the date of being dealt with by the MLRO. If MLRO has taken any action, created any reports, that report needs to be there for at least 5 years, for at least 5 years. Everywhere there is 5 years, so it will be a little easier for us to remember it and refer it. Okay, transactions and these things. Okay, I hope this is clear. I hope this is clear. What do you say? Yes, I hope this is clear. Okay, now we'll finish in 10 minutes and then we'll take a 10 minutes break also, so no worries. Now, customer due diligence. And please stay with me in this session because after the break we are going to solve certain questions. So customer due diligence. Okay, customer due diligence, we at least solve 2 questions, we can also solve 3 questions given based on the responses that I received from you. So customer due diligence, when I say customer due diligence, so taking steps to identify customers and check they are who they say they are. Check they are who they say they are, that is whatever they are disclosing, whether they are the appropriate person or not. For example, if I go today, if I say that I need to open a new account is exclusively for the purpose of receiving the ACCA fees, okay, I need to open a new account, what they'll say, I'll tell them that I am a chartered accountant and I am a trainer for CA and ACCA. So what they'll say that first of all show me that you are CA Supreet Agrawal only, so I'll show them my documents. Then they might also ask that is there any proof that you are into the teaching field because you are opening a current account, so is there any particular instance where you can submit us that you are actually into the business. So I'll submit them certain pointers that I'm in the business via this name and everything. So once they get that understanding, they will keep it. So taking steps to identify customers and check they are who they say they are, also known as know your customers. You might have fulfilled a lot of KYC norms, right? You might have fulfilled a lot of KYC requirements these days, and that is because of the increase in money laundering instances, and that is why customer due diligence becomes a really important process here. Must be conducted when we discussed in the earlier session, but when establishing a business relationship, when there's a suspicion, these are the points that we have discussed, but there are 2 additional points. When carrying out an occasional transaction, that is whenever you consider any unusual transaction. In my case there was an unusual transaction, and that is why they confirm the KYC that whether you are who you say you are. And when there are doubts concerning the accuracy and reliability of previous identification information, that is wherever there are doubts. So when establishing the relationship, when occasional transaction is there, when there is a suspicion, or when there are doubts. Okay, once you complete all of this, then it would be called as your important customer due diligence process. Okay, now comes one of the important portions here. After suspicion, there is just education and training and other reporting duties, but there comes very important point, because this becomes your important pointer of this chapter, which is suspicion. This becomes your important point here, which is suspicion. This becomes your really important point here, which is suspicion. Recognition and reporting, suspicion, recognition and reporting. That is, how do you suspect if there is a suspicion, how do you identify if there is a suspicion, and how do you report it once you identify it. So one which is inconsistent with the client's known legitimate business or personal activities, there you can say that there is a suspicion. For example, in my case, generally I do not pay for the students, but even if I make the international payments, it is for the purpose of purchase of some equipments or anything. However, in this particular case, I made a payment to the institution, that too on the name of somebody else. That is why they flagged that transaction, because it was unusual for me. Okay. Now examples: unusually large cash deposits, frequency conversion of frequently, not frequency. I'll correct it over here. It's not frequency, it's frequently. Okay, frequently conversion of currencies. Counterparty is not known, that is whomsoever you are paying, that is not known. That might give you a money laundering issue. Any activity inconsistent with normal business activity, Offshore business arrangements without clear business purpose. Offshore business arrangements without clear purpose. That is, you are doing an offshore business arrangement. Business maybe acquisition, selling, transactions, but there is not a clear business why you are doing so. Okay. Any activity inconsistent with normal business activity could include any of them. So these could be certain examples of suspicion. Now, how do you need to report it once you identify it? So professional accountants are legally required to report suspicions to the appropriate authority. Now, this appropriate authority could be different in different cases. Okay, it is a criminal offense not to do so. Oh my God, there is a criminal offense. Even if you don't do it, we discussed the principal offenses, failure to report suspicion. So it is a criminal offense if you don't do it. Okay, so it's not just a wish that you will report it. It's a legal requirement also. Now we are moving towards the end of the chapter where we are discussing about education and training. So relevant individuals must be provided with training on what? This is a generalized answer. Do you need to remember these points? Yes. I will suggest suspicion you need to remember. Do you need to remember CDD? Yes. Do you need to remember record keeping? Yes. Word by word? No, but you need to remember the concept of 5 years. Then MLRO? Yes. Okay. But other than that, you do not need to remember everything word by word, or just the keywords would do fine. So relevant individuals must be provided with education or training on how to prepare, how to report to MLRO. Yes. How to identify clients? We have already discussed it. How to recognize and deal with the situation that may involve money laundering? That training might be provided by MLRO themselves. The main money laundering offenses, the business's procedures to prevent money laundering. All of these should be part of the training, should be part of the education and training programs. And we have discussed it multiple times, so there is no much requirement over here. Just in case if you face any trouble, please feel free to let me know. Methods of training could be what? Conferences, seminars, courses run by external organizations, participation in computer-based training courses and webinars. All of these could be the sources. Now, other reporting duties. What are other reporting duties? What are other reporting duties? So, reporting duties other than reporting suspicion. Okay, these are other reporting duties. That is, once you have reported the suspicion, then there are other requirements also, no, that you might be required to report. So, report to regulators. Sometimes, once you have reported to MLRO, as part of your professional accountancy profession, you might also be required through ethical norms to report to the regulators also. So, report to regulators, auditors, reports on financial statements, auditors, reports on financial statements, auditors reports, as in sometimes you might be required to report on financial statements, but as part of your audit procedure, you identified some certain money laundering transaction also. Then reports to those charged with governance, Now, this we will be discussing under ISA 200 series. How do we report to those charged with governance? What are the contents of that report? Then statement of circumstances on resignation as an auditor. Statement of circumstances on resignation as an auditor. See, whenever I'll put up the inverted commas here. So what happens is, whenever you resign as part of your audit office, that is, whenever you resign from the office of your office of the auditor, you need to submit a statement of circumstances to the relevant authorities that what has actually happened, why you are resigning from a particular office. Okay, reports on director's conduct. Sometimes you need to report on non-financial matters also, which could be the director's conduct also. So you might be able to report that. This is just other reporting duties other than the reporting on money laundering or suspicion report. Now, basic elements of AML program. What are the basic elements of AML program? So dedicated resources should be there. Example, MLRO. Written policies and procedures should be there. We discussed about it. Comprehensive coverage, especially CDD and KYC, should be comprehensively covered. Do we understand KYC? Do we understand CDD? Yes. Timely escalation should be there so that MLRO and other authorities could take action, and resolution of matters should be there. Expressive management support is there. That is why MLRO is a key person, is one of the person with the responsibility and the experience also, with the superiority as the experience also, as well as the experience also. So that what could happen? So that this MLRO could actually work with the top level and get the resolutions done. Sufficient training and education should be provided, especially by MLRO, and regular review and audit of the program should happen to see if there are any changes or if there are any new requirements or not. With this, we have completed chapter number 2 as well, all of the remaining portion. Let's quickly define if we have covered the objectives or not. So define money laundering and discuss international methods for combating. Yes, we discussed about FATF also, no? So that is the international methods in the form of FATF. Okay. Then explain the scope of criminal offences of money laundering and how professional accountants may be protected. Yes. Explain the need for ethical guidance. Yes. Describe how accountants meet their ethical obligations to help prevent and detect money laundering via record keeping and reporting of suspicion. Yes, we discussed about CDD, we discussed about SAR. Explain the importance of CDD, also referred to as KYC. We discussed about CDD in detail. Recognize potentially suspicious transactions. We discussed about identification and reporting of those transactions, and we discussed about the basic elements of AML program also. With this we have covered everything about the money laundering here. Now we are going to come up after the break and we are going to start with questions of chapter number 1 and 2. Okay, so I hope you understood it. Now we are taking a break of 10 minutes and then we will come back and we will discuss about everything related to the money laundering and chapter number 1 questions. So we are going to solve chapter number 1 and 2 questions from the ACCA study hub now. Okay, see you. I hope everybody is back. What do you say? I hope everybody is back. What do you say? Yes, I hope everybody is back. What do you say? So now we have to solve certain questions from chapter number 1 and 2. Okay, so we will be taking certain questions and what I will be doing is I will be discussing those questions with you and then we can move forward. Okay, and then we can move forward. Okay, so I think I am audible and visible clearly. Please confirm on the chat box. Yes, please confirm on the chat box if I am audible and visible clearly. Okay, understood. Now we are going to solve certain questions which are taken from ACCA study hub only. Okay, and we are going to solve these questions for chapter number 1 first and then we will be moving towards chapter number 2 as well. Okay, so I hope this is good. Okay, how many questions do we have? So we have this question number 1, then we have an additional question. This is also taken from ACCA study hub only. So question number 2 is there. Okay, are we going to read the full? We are not going to read every single line of the answer, but what we are going to do is we are going to read the question, we are going to identify that what could be the answer, we are going to frame some answers and then we are going to read it. Okay, that is how we are going to do it. Okay. So now audit committee related question. So the objective of a system of corporate governance is to secure the effective, sound and efficient operation of companies. This objective transcends any legislation. Okay, I am not solving the question in the exam technique now. I am trying to solve the question in the format that makes you understand it first. Okay, after we complete few chapters, say 3 or 4 chapters, then we will be solving the questions in the exam format only. That is how do we need to solve in exams. Okay, what we need to read first, how do we need to analyze, what are the requirements, we will discuss everything. Okay, but for first few questions what I am going to do is I am going to read with you so that you understand what is required. Okay, so this objective transcends any legislation or voluntary code. Good corporate governance embraces not only making the company prosper but also doing business in a legal and ethical manner. That is, it is highlighting the importance of corporate governance and the benefits of having a good corporate governance system. A key element of corporate governance is the audit committee. Yes, we agree. In many countries, the audit committee is a committee of a single board of directors and is a voluntary nature regulated by voluntary codes. In other countries, there are committees which are of a supervisory nature and these are regulated by the statute. Let's read it again. In many countries, the audit committee is a committee of a single board of directors and is of a voluntary nature regulated by voluntary codes. That is, it is not mandatory in a lot of countries. However, in other countries, there are committees which are of supervisory nature. Supervisory nature as in there are certain committees which overviews or which oversees the regulation of the audit committee and its working. And these are regulated by statute. That is, there are legal requirements. For example, in Germany, all large public companies must have a supervisory board which contains non-executive directors who elect the board. That is something that we have discussed also. Okay. Now the requirements. So requirements. See, this question is of what? This question is of, first of all, 10 plus 5 plus 5, that is 20 marks. Okay, 20 marks question. Okay, 20 marks question. Okay, now discuss how an audit committee could improve the effectiveness of the external auditor's work. Explain how an audit committee could improve the effectiveness of the external auditor's work. How audit committee improves the effectiveness of the external audit work? That is the first question. Second, discuss the problems of ensuring the independence of the members of the audit committee where the membership is regulated by a voluntary code of practice. That is, if it is a voluntary code of practice, then what is the requirement of independence and how do we need to evaluate it? Then discuss the view that the role of the audit committee should not be left to voluntary codes of practice but should be regulated by the law in all countries. That is, there's a debate that might happen that whether corporate governance could be given through voluntary codes or it should be regulated by the regulatory bodies or via the code and laws made in the country. Okay, so that is something that is important. Now, any suggestions that you would like to give here, anything that you would like to mention over here, that how do we need to write the answers for this one? Tell me. Explain how an audit committee could improve the effectiveness of the external auditor's work. How audit committee improves the effectiveness of the external auditor work? Let me know in the comments box. Let me know in the comments box. Please tell me whatever answer is there. See, be it the right answer or the wrong answer, that works perfectly, not an issue. Okay, but what we need to understand is that we need to interact, that we need to answer. Otherwise, I'll have to read the answer for you just. But if you have any questions, any answers in your mind, please feel free to let me know so that we can discuss also. Yes. If you have any questions, any answers in your mind, please feel free to let me know so that we can read also. Yes, so that we can read also, no? Please tell me. Yes, what could be the answers? Yes, what could be the answers? Okay, let's read it. How does it end up improving the effectiveness of the audit function, the external audit function? So audit committees afford a means of strengthening the external auditor's independence. An audit committee is a committee of the governing body of a corporate entity which has delegated responsibility for the external financial reporting process. We discussed, no? Delegated, which has delegated responsibility. Delegated from board, right? So ultimate responsibilities of the board, but board may delegate certain responsibilities to the audit committee for the external financial reporting process and system of internal controls. The development of audit committee, which has varied from country to country, is often being stimulated by corporate failure. Audit committees should assess the audit process by preempting unexpected corporate failure. Audit committee should assist the audit process by preempting unexpected corporate failure and undetected misconduct by senior officials. The establishment of audit committees has been foremost in North America and the UK. That is, they started with this practice, that North Americans and UK people started with this practice of having a corporate governance code and corporate governance meetings over here. Okay, the establishment of the audit committee has been foremost in North America and the UK, closely followed by Australia, New Zealand, South Africa, Malaysia, Singapore and Europe. The size and composition and duties of audit committee may vary from country to country. That is also understandable. An audit committee can improve the effectiveness, although this line is something that you should write. Okay, now an audit committee. Okay, do you need to write the exact answer with exact explanations and everything? No, definitely not. What they are trying to do is they are trying to teach you, right? But your purpose is not to teach the examiner. Your purpose is to tell him or her that you understand the concept. Okay, so you do not need to write these many long paragraphs, but yes, your answer should be conceptual. Okay, so you should start with what is corporate governance. You should start with how corporate governance is related to audit, and then ultimately you should move to the benefit. Then an audit committee can improve the effectiveness of external auditors' work by increasing the assurance. See, here also you will see that this part is general. This part is what? General, right? So you should also write what is corporate governance, how is it related to audit, these things. An audit committee can improve the effectiveness of the external auditors' work by increasing the assurance that the external auditors can derive from systems of corporate governance and internal financial controls. That is what they can do. What is in the control of the audit committee? Audit committee controls, or audit committee overviews the financial reporting process and the system of internal controls. So they can help in increasing the assurance of what? of the external auditors in these processes. So see, by increasing the assurance that the external auditors can derive from systems of corporate governance and internal financial controls. Okay, the committee will be involved in ensuring that the external auditor is independent and will participate in the selection of the auditor by recommending certain firms who have knowledge of their industry and reviewing the source and rationale for selecting certain firms of auditors. That is, audit committee recommends audit. Okay, so the meaning of this line, is audit committee recommends auditors, and you can write it in simple language also, not an issue. But what I'm trying to do is I'm trying to decode that what all things are written over the answer and what you need to write. Okay. Additionally, the terms and scope of the external audit and corporate governance engagement will be discussed as with the engagement management letter and its effect on the current year's audit. The committee will encourage discussion with the external auditors about how controls might be improved and rationale for using specialist departments of the audit firm and specialist advisors. See, this is the point 2. This was point 1 on how to improve or how they will make it effective. The committee will encourage discussions with the external auditors about the external auditor about how controls might be improved and the rationale for using specialist departments of the audit firm and specialist advisor to either identify the benefits or to evaluate the controls. So this could be point 2 of benefit. A meeting of internal auditors, external auditors and the audit committee will review the audit plan with a view to minimizing duplication of work, the effect of new auditing standards and providing value for money for the company. So this will help. This is the third point. That will help the external auditor to improve the efficiency because there will not be duplication of work. So it will help the external auditor to increase their efficiency. So this is third point. First point is what? That by increasing the assurance that the external auditors would get from the system of internal controls and corporate governance. Then the committee will encourage discussions on how controls could be improved further. And then third one would be that they will arrange a meeting with the internal auditors and external auditors, and everyone would sit together, and what they'll try to reduce the duplication of work, because internal auditor would also be taking the samples, external auditor would also be taking the sample, internal auditor would also be evaluating and understanding the business, external auditor would also be doing the same. So how we can work together and reduce the duplication of work, that is how efficiency will increase. Now, the timing and nature of reports from the external auditors will be reviewed to assess their effectiveness and any contentious accounting issues discussed. So if there would be anything that needs to be discussed, they will discuss it. So that is how the effectiveness would be there, that they will review the auditor's report and before issuing, so that if there would be anything that would be left, so they can complete it then and there and close it, right? So that is the third point of improvement. Generally, the audit committee will make suggestions. The audit committee will do what? The audit committee will make suggestions for the problem areas which the audit can address. The external audit partner and the chairman of the audit committee will discuss differences of opinion and attitudes of committee members and feedback on the performance of the auditor. So once they discuss about the viewpoint of the committee members and the attitude of the auditors and feedback of the auditors, the process would get efficient. So this is fourth point. Now, the opening up of communication channels between the external auditor and the committee and the audit committee and two-way discussion enhances the quality of the audit and adds value to the audit process. Let's read this line again. The opening up of the communication channels between the external auditor and the audit committee and two-way discussions enhances the quality and adds value to the audit process. So, two-way communication. Okay. Two-way discussions enhances the quality of the audit and adds value to the audit process. So this is fifth point, okay, that you can write. Do you need to write in the exact words? No. Okay. Then the audit committee will further discuss with the internal and external auditors the intended scope of work with a view to satisfying itself that no unjustified restrictions have been imposed by executive management. So satisfy itself that no restrictions have been imposed by executive management on the working of the auditors. So that is the sixth point. Okay, that is the sixth point. Additionally, the following duties of the audit committee may assist in the external audit process. These are the duties of the audit committee, but this might assist in the auditor's work also. Okay, dealing with difficulties in the performance of the audit, such as non-availability of client personnel. See, audit committee will make it happen that external auditor should have access to the relevant people within the organization, relevant evidences and relevant information within the organization. Then reviewing the findings of the internal and external auditors. Reviewing the findings of the internal and external auditors. When audit committee will do so, it will help the external auditors and internal auditors to identify that what areas they have identified as red flags and whether they are actually red flags, so they can be sorted with the discussion parts. Okay. Then reviewing the company's financial statements and annual report prior to the submission to the board. See, what happens is when the auditor has reviewed the financial statements and they directly presented it to the board, there might be certain chaos that might happen, there might be certain misunderstandings that could happen, there might be certain things that could have been resolved with the explanation. So they submit it first to the audit committee reviews it and then present it to the board. So reviewing the company's financial statements and annual report prior to the submission to the board enhances the effectiveness of the audit, because if there are any points for discussion, that is flagged at the audit committee level only. Then 10th point, reviewing public announcements that have a financial impact. Reviewing public announcements that have a financial impact. So when they review the public announcements, they anyways help the auditor in identifying whether there is any other information that has material inconsistencies. For example, other information. So auditor has a responsibility towards reading the other information and identifying if there is any material inconsistency. So audit committee also helps in doing so by reviewing all the public announcements made in the course of financial impact and their financial impact. Then reviewing and monitoring compliance with the corporate code of conduct and legal and statutory requirements. Since audit committee also has this responsibility and auditor also needs to report on this, it will help the auditor to enhance their effectiveness and efficiency if the audit committee is working appropriately. So that becomes 11th point. Now, audit committees are seen as valuable not only for overseeing the external reporting process and external audit, but as a means of ensuring responsible corporate governance. Definitely, yes, audit committee is one major part of the corporate governance. Okay. They are an aid in ensuring the professional independence of auditors and the efficiency and effectiveness of the audit and system of corporate governance. Now, you see what they did. They have given a conclusion here. They have given what? A conclusion here. So, this is something to learn. This is something to learn. That is what you need to do. You need to start with the introduction first. The general points. Okay. Then you need to mention all of your points. Okay. And then you have to give a conclusion also. And that is how you close the answer. Understood this point? I hope this is understandable. This was a very pure and simple question, direct question. And believe me, first few questions that we are going to solve are going to be like this only, the direct and general questions, so that we can get understanding about how to write the answers first. Once we complete few questions and we are sure about what kind of language we need to use and how do we need to draft our answers, then we will go for the technical answers of planning stage also. Till that time we will be going to the planning stage anyways. Okay, now second point. Discuss the problems of ensuring the independence of the members of the audit committee, where the membership is regulated by a voluntary code of practice. See, ensuring independence when it is given by statute is easy because there are clear rules and guidelines. However, if there are no guidelines, that is, it is a voluntary practice, then how you should ensure the independence. So let's read it. Independence of audit committee members where only a voluntary code is in place, that is, there is no fixed code. Okay, so the members of the audit committee generally comprise non-executive directors. We discussed minimum 3, small 2, right? So the New York Stock Exchange, the London Stock Exchange require audit committees to comprise all NEDs. All of these should be NEDs. Okay, at least in UK and US NASDAQ. Okay. Now, and although they should be independent of the company and declare any interest in the company, the general absence of regulation in this area means that independence is often hard to achieve, because if there is no regulation, we could hire anybody, and anyways it is very difficult to hire the independent auditors, to hire the audit committee members. Why? Because they need to be independent, they need to be non-executive. So anyways it becomes really hard to identify those people who might be independent also, who wants to be non-executive also, and who wants to work in the audit committee also, and that is why it becomes really challenging. So anyways it becomes harder, and when there are no laws and regulations, it would definitely be compromised, or it might be compromised. So the general absence of regulation in this area means that independence is often hard to achieve. For example, the entities often sit on the committees of several companies, and there are often no regulations as regards conflicts of interest in this area. So one entity could be of multiple companies also. Say Mr. A could belong to the entity or audit committee of multiple companies also, and that might create conflict of interest if they are in the competition business, right? Now. Additionally, the company pays the entity's salaries, and this fact ensures that independence is difficult to achieve under a voluntary code. So what they did again, this is general. Okay. Do you need to write the exact points? No. But do you need to explain the problem first? Yes. In general terms, yes. Okay. Then the entities often sit not only on the audit committee but also on several other board committees, making a strategic contribution to the running of the business. They have, so this is one problem. See, first of all, you have to identify that what you are writing. What you are writing here, you are identifying independence of committee, problems in ensuring the independence. So the entities often sit not only on the audit committee but also on the several other board committees, making strategic contribution to the running of the business. Okay, that is first thing that makes it difficult for us to have the independence. They have to balance their role as audit committee member and monitoring of executive directors and management with their role as corporate strategists. They are acting in several capacities, and therefore their source of influence is somewhat diffuse, and because of the complexity of the entity's role, it is difficult to imagine that they can act independently in exercising their corporate governance role. This is the extension of that point only. The internal structure of the company and the perception of the role of audit committee by the main board will determine the abilities of the entities to exercise independent judgment. That is, whatever, it depends on the internal structure. This is the second point. It depends on the internal structure of the company, that what kind of roles and responsibilities are given to these people who are non-executive directors, and what kind of respect is given. When we were discussing yesterday, we discussed about that corporate governance policies could only work well, the audit committee could only work well if they are being given due importance, due respect, due authority and rights from the part of the company's governance structure. Entities may have previous executive involvement with a company and have participation in share option scheme which is inconsistent with the exercise of independent judgment. So this is problem number 3. That is, they might have certain previous relationship with the company. They might have been the consultants of the company. They might have been certain people who used to work with the company, who had a business relationship with the company. They might be members of the ESOP schemes or anything, right? So that becomes really challenging for us to achieve independence. Okay. It is extremely difficult for an entity to exercise independent judgment when they have any interest in the company. Example, retired executive director or significant shareholder is there, then it becomes really challenging. So let's write it. Extremely difficult for an entity to exercise independent judgment when they have any interest in the company. Example, retired executive or significant shareholder are appointed directly by executive directors and are remunerated by the company beyond a basic salary. So this becomes your fourth problem. But what is the fifth one? What is the fifth one? This one. Okay, this is the fifth one. That is how you need to summarize your content. I hope this is understandable. Please let me know in the chat box if this is understandable. Please let me know in the chat box if this is understandable. I am requesting answers from all of you. Please, if possible, please do answer so that we can interact also. Yes. I would strongly suggest all of you to please answer if possible. Please answer. Yes, if possible, please answer. Okay, I hope you understood this. Okay, so we have solved part B of the question. Now we will solve part C of the question. Okay, so discuss the view that the role of the audit committee should not be left to voluntary course of practice but should be regulated by the law in all countries. Let's understand the question first. Discuss the view that the role of the audit committee should not be left to voluntary course but it should be given under law in all countries. What do you think? I strongly agree to this. Let's see. Regulation of audit committees. Okay, so if the audit committee is not governed, if the audit committee is not governed by statute or required governance code, several issues arise. One of the problems of allowing self-regulation in this area of corporate governance and audit committee is that if prescriptive approaches are advocated, they may not receive the support of key industry groups, and in the absence of major corporate failure or fraud, governments may be reluctant to impose regulations on industry as it may be seen to be a further burden to management. In short, they might say that this is just the general portion. Okay. Without statutory regulation, there will be inconsistency of practice and standards between companies. See, can you see the pattern here that they write the general sentence first and then in the second paragraph they write the actual answer? Yes, there's a pattern, and do you need to follow it? Yes. Without statutory regulation, there will be inconsistency of practice and standards between audit committees. Okay. Without statutory regulations, there will be inconsistency of practice and standards between audit committees. That is first. Members of audit committees may find it difficult to criticize management. Members of audit committees may find it difficult to criticize management. That could be the second point. Okay. The form of the annual report of the audit committee may not be consistent without some form of statutory regulation. So there might be inconsistency. That is third point. Annual report of the company might not be consistent. Okay. Shareholders are poorly informed about the working of the audit committee, and there would seem to be a substantial benefits from making publication of the report of the audit committee a statutory requirement. So shareholders are poorly informed about the working of the audit committee, and there would seem to be about the working of the audit committee. That should be a sufficient point here. And there would seem to be a substantial benefits from making publication of the report of the audit committee a statutory requirement. Now, greater transparency and disclosure can be uncomfortable for companies, but the current reliance on voluntary practices creates a market risk. So it creates a market risk. That is the fifth point, which can be eliminated through changes in the statute and disclosure practices. Okay, so that is one thing. What are the 5 points? So number one is, without a statutory regulation, there would be an inconsistency of practice and standards. Members of audit committee may find it difficult to challenge the boards. Then there could be an inconsistency in the form of annual report, format of annual report. Then shareholders are poorly informed, and then finally it creates a market risk. However, the prescriptive approach to the formation of audit committee may result in disproportionate significance being given to its role and may affect corporate performance and long-term potential. That is, may result if we create, this is if we create the statute, so may result in disproportionate significance given to its role and may affect corporate performance and long-term potential. That is, there might be a lot of importance. If we have given the statutory roles to the audit committee, then there might be a lot of importance that might be given to what? To the audit committees, and this might disproportionately influence the long-term objectives of the organization. Problems would also arise if a single model audit committee were imposed on a wide range of companies of different sizes and financial profiles and different internal structures. Many smaller companies would not see the benefits of appointing an audit committee. Many smaller companies would not see the benefits of appointing an audit committee, and they may feel the statutory regulation is counterproductive with the cost outweighing any benefits. So this is about if no statutory laws, and this is about if there are statutory laws. Okay, for AC, for audit committee. However, it is important that some form of monitoring report is made to shareholders even in the case of a small publicly quoted companies. Okay, if audit committees are unregulated, there is little formal requirement for adherence to professional values of competence, independence or effective reporting to shareholders. The identity and experience of the audit committee members becomes an important issue in these circumstances. What happens is that in this particular case, if there is no guidance, if there is no statutory requirements, then it raises a big question on the competence of the parties who are doing it, on the qualification of the people who are doing it, and this might lead to poor communication. Have we covered it? Yes. Accountancy bodies will find it difficult to set standards for NEDs on audit committees where such persons are non-accountants, and the problems of independence of NEDs are set out in part B above may dictate that some form of statutory regulation may be required. So this is the point that we are trying to make here. I hope this is clear. Not an issue. I hope this is clear. Yes. Now there is question number 2. let's just read it. Okay, we will not solve this question. I'm just reading this question for the proper purpose of explaining you that this is solvable. Okay, but what you have to do is you have to log into your study hub, solve this question, and just in case if you face any difficulty, please feel free to let me know. Okay, however, I'll read the question with you, then we'll take a 2 to 3 minutes break, and then we'll go for certain questions of chapter number 2. See, the questions of chapter number 1 is not directly very important for the examination. This might form some part of the questions. However, when I talk about chapter number 2, that is money laundering, the question can directly come also, can form major part of the question also, so that becomes really important. Okay, now additional question, this was given under additional question in ACC study hub, flight investment company. Okay, so Ernie Rowe, a managing director of flight investment company, has contacted you as his auditor for advising regarding the establishment of an audit committee. Okay, so you are the auditor and they have reached out to you for guidance on how to establish the audit committee. The company operates a group of investments and property management companies with interest overseas and has a small internal audit department. Some companies are audited by other firms and some by other offices of your own firm. See, understand this. The company operates a group of investment and property management companies with interest overseas and has a small internal audit department. That is, they have the overseas interest also and they have a small internal audit department in place also. Okay, some companies are audited by other firms and some by other offices of your own firm. So some are audited by other firms and some are audited by other offices of your own firm only. The board of flight investment company comprises Ernie Rowe, the heads of 3 departments of the main activities undertaken by the group. So she is the head, property investment and marketing, and a non-executive director, Ernie's brother-in-law, that is the related party only, who rarely attends anything. Okay, Ernie himself is the driving force behind the business. When the idea of an audit committee was raised by an insurance company with a significant shareholding in flight investment company, because they raised that you should have an audit committee so that we can also trust you in the long term format, because we are the significant investor also. Ernie, with his usual enthusiasm, was keen that he should head the audit committee, but was not too sure of its role. He has turned to you for guidance. See, Ernie wants to head the audit committee also. Okay, so let's see if what are the questions. So draft for inclusion in a letter to Mr. Rowe. Okay, who is Mr. Rowe? Who is Mr. Rowe? The managing director. Okay, an explanation of the main roles of the audit committee. So you have to explain the main roles of the audit committee. Did we discuss it? Yes, we discussed it yesterday in detail. So that would be the complete answer. A discussion of how the audit committee should be composed and necessary changes to the board to enable this. So there should be at least 3 non-executive independent directors, right? So you have to do that. Can Ernie be the chairman? No, right? A description of the specific responsibilities an audit committee should have in relation to internal audit and external audit. So responsibilities in relation to internal and external audit. See, this question is of 5 marks, then this is of 5 marks, then this is of 4 marks, then this is of 6 marks, and it makes total 20 marks. Okay, I hope this is clear. So this question is very direct and very simple. What you can do, you can go to the study hub and you can solve this question, and if you face any trouble in any of the points, please feel free to reach out to me. Now let's take a 2 to 3 minutes break, and then we will start with questions on chapter number 2, which is money laundering. Okay. Okay, so I think we are back. Yes, I think we are back. So now let's solve questions from chapter number 2, which is money laundering. Chapter number 2, which is money laundering. Okay, chapter number 2, which is money laundering. Now my friends, when we talk about this chapter, money laundering, this becomes really important from the exam point of view. Why? Because I've always seen that this chapter forms some part of the question in every attempt. I'm really sorry. Yes, in every attempt this chapter forms some part of the question. It could be asked in section A question, section B question, okay, but it definitely forms part of the question, so that becomes really important. I've seen that at least one of the question is almost asked from this questions in every single attempt. Okay, so you need to study this chapter very well. You need to solve all questions of this chapter, and this is a very scoring chapter also, because there are limited content but very good marks. Okay, so let's solve all types of questions which are given in study hub. Let's first number the questions, okay, so that we are sure about it how many numbers of questions are available in ACC study hub. Will we solve the questions that are from other publishers from reference material? Yes, but for that we have to solve certain more number of chapters, say 3 to 4 chapters we will solve, then together we will go for all the reference material questions also. Okay, so here this one is chapter number 1. Okay, this is question number 1. Explain the term money laundering, then B part, then C part and all. Then there's a suggested answer. Let's scroll, let's see how many number of questions are there. Then this is the answer of it. Then under additional question there is one more question, which is Detza and company. So that is our question number 2. Okay, then the suggested answer is there. Then exam format revision questions are there. So under that banana company is there. So yes, question number 3. Then there is clean company, question number 4, clean company. Okay, then there, I think that should be enough, that should be it. 4 questions should be there in ACCA study. Yes. Okay, so what we are going to do, we are going to solve 2 questions, question number 1 and question number 2, but here we are going to read only question number 1, and then question number 2 I will discuss with you, and then you can solve it at home. 2, 3 and 4, but on that I will discuss 2 for the proper understanding. 3 and 4 you can read yourself, analyze yourself. Just in case if you face any trouble, please feel free to reach out to me. Okay, and then we might be solving more questions in our further classes. Okay, so now money laundering. Explain the term money laundering. We have already discussed about the definition. Can we solve it? Yes. Comment on the need for ethical guidance for accountants on money laundering. Did we discuss about the ethical guidance? There was a separate heading, right? That what are the ethical needs? The Financial Action Task Force on Money Laundering recommends preventive measures to be taken by independent legal professionals and accountants, including sole practitioners, partners, and employed professionals and professional firms. We'll discuss about it. Describe 4 measures that assist in preventing professional accountants from being used for money laundering purposes. So that is also understandable, not an issue, right? So this seems like a question of 15 marks. How? 3 plus 4 plus 8. So this is 15 marks question. But sir, no question is asked of 15 marks, right? Yes, but this forms part of the question, right? That is why it is mentioned like this. Okay. So meaning of the term. Later on we will discuss about how much time you need to invest, what kind of questions you need to solve first. Everything we will be discussing about. Okay. Meaning of the term. So money laundering is the process by which criminals attempt to conceal the true origin and ownership of the proceeds of their criminal activity, that is dirty money. See, we have already discussed these terms today only. That is why I am not throwing much light on this. I am just reading it out. Okay. Allowing them to maintain control over the proceeds and ultimately providing a legitimate cover for the sources of income. Did we cover this definition today? Yes, this is the definition, right? And we covered today only. Okay. The term is widely defined to include possessing, in any way dealing with, or concealing. Did we discuss it today? Yes. The proceeds of any crime is called as criminal property. It also includes an attempt or conspiracy and aiding, abetting, counseling or procuring. Did we discuss it? Yes. We discussed it today only, part of definitions. Okay, discuss it today. Further, it includes failure by an individual in a regulated sector in the UK to inform the Financial Intelligence Unit as soon as practicable of knowledge or suspicion. So failure to report suspicion, this is talking about failure to report suspicion. Did we discuss about it? Failure to report suspicion to FIU. Did we discuss about it? Yes. Okay, then see, they have given tutorial note and everything. Do we need to read it everything? No, we do not need to read everything in a question solving session, not an issue. Now, question number 2, need for ethical guidance. So, accountant firms working in the country that criminalizes money laundering are required to comply with anti-money laundering legislation, and failure to do so can lead to severe penalties. Guidance is needed because legal requirements are onerous and money laundering is widely defined. Legal requirements are onerous, and onerous as in what? Onerous as in loss making. Okay, onerous as in what? Loss making. Okay, money laundering is widely defined. Widely as in it has a very wide scope. It has what? It has wide scope. And accountants may otherwise be used unwittingly to launder criminal funds. That is why it is important. Now, accountants need ethical guidance on matters where there is a conflict between legal responsibilities and professional responsibility. That is why they need the ethical guidance. Okay, this is a very, very important line. Why there is a requirement of ethical guidance? Because Sometimes there might be a debate or there might be a fight between the legal responsibilities and the professional responsibilities. In particular professional accountants, let me read the comments if there are any. Okay, let me read the comments if there are any. No. Okay. Guidance is, in particular professional accountants are bound by a duty of confidentiality to their clients, that is they cannot disclose any of the, we will discuss it under ethics, but let me tell you what is the confidentiality. So a professional accountant cannot disclose any information which he or she has gained as part of the professional assignment, okay, unless required by law. So in this case, if the law mandates that you have to disclose it, for example in this case money laundering law makes it mandate that if you come across any suspicion or any knowledge of any money laundering transaction, you have to report it to the appropriate authority, then you can, otherwise you cannot. Okay, now guidance is needed to explain. Now these are the points that we discussed. How statutory provisions give protection against criminal actions for members in respect of their confidentiality requirements, that is whether disclosure would mean breach of confidentiality or not. So we discussed that when it would be considered as breach of confidentiality, when it would not be considered as breach of confidentiality. When client confidentiality override provisions are applicable, when client confidentiality override provisions are available. Okay. Now further guidance is needed to explain the interaction between accountants' responsibilities to report money laundering offences and other reporting responsibilities. For example, so we discussed this as part of our other reporting responsibilities. Remember, other reporting responsibilities we discussed in that manner. Okay, so reporting to regulators, auditors report on financial statements, reports to those charged with governance, and reporting misconduct by members on the same body. We discussed about all of this today, and today only we discussed, right? Now professional accountants are required to communicate with each other when there is a change in professional appointment, that is professional etiquette. Additional ethical guidance is needed on how to respond to a clearance letter where a report of suspicion has been made or is being contemplated in respect of a client in question. Ethical guidance is needed to make accountants working in countries that do not criminalize money laundering aware of how money laundering legislation may nevertheless affect them. Okay, that is, if it is not penalized, if it is not criminalized to enter into money laundering transaction, are there certain countries like that? Yes, there are certain countries like that. But if there are no provisions to combat money laundering or terrorist financing acts, then what we can do, then there is no requirement from the end of the professional accountants also to report anything. Okay, so ethical guidance is needed to make accountants working in countries that do not criminalize money laundering aware of how money laundering legislation may nevertheless affect them. Okay, such accountants may commit an offense. Such accountants may commit an offense if, for example, they conduct limited assignments or have meetings in a country having anti-money laundering legislation. Okay, such accountants may commit an offense if, for example, they conduct limited assignments or have meetings in a country having money laundering legislation. Okay, but if they are in the jurisdiction where money laundering is criminalized, then there might be an issue, because if they follow the same practices over there, then they might end up facing a big issue. Okay, now what is the third question? So the third question is, the Financial Action Task Force or Money Laundering FATF recommends preventive measures to be taken by independent legal professionals and accountants, including sole practitioners, partners and employed professionals in professional firms. Describe 4 measures that assist in preventing professional accountants from being used for money laundering offences. Now this is a very important question, that how including this. Okay, this is one only, but again I am mentioning it again. So what we need to understand here is that how professional accountants can stop themselves from being used for the purpose of money laundering, because they are in the public eyes also. So how they can prevent. Okay, that is something that we need to discuss over here. Okay, so the following measures are designed to assist in preventing professional accountants from being used for money laundering purposes. Developing programs against money laundering and terrorist financing. Developing programs, that is, their firms, in their individual capacity also, they should have clear programs, say anti-money laundering programs, towards how they will stop themselves, how they will identify the cases of money laundering, how they will identify the cases where they are being used for the purpose of money laundering, and how they will combat with it. Okay, compliance officer, they could have a compliance officer. MLRO could be there. MLRO, example, MLRO could be there. Okay, did we study this? Yes, MLRO could be there. Okay, Employee training program. So we discussed about education and training, right? Education training via workshops. So that could be there, education and training via workshops, seminars, right? That could be done through external parties, through internally also. Now, customer due diligence and know your client. We discussed about CDD and KYC procedures. Then establishing and enhancing record keeping systems. Establishing and enhancing record keeping systems. All transactions, the verification of client identities. You remember what was the timeline? So all transactions, 5 years from last transaction date or end of relationship, whichever is later. Okay, all verification 5 years from the end of 5 years from the end of relationship. Okay, reporting of suspicious transactions should be there. How they will report the transaction, what reports? Example, SAR, suspicious activity reporting. Then refusing to have relationship with shell banks as in the banks which promotes these transactions in the form of money laundering. Okay, I hope this is clear. Now, tutorial note, only 4 are required. So why did we mention more? I would suggest that you can mention more in the examination also. That is not an issue. Okay, then there is explanation of it given. Developing programs, compliance officer, employee training programs, customer due diligence, CDD measures should include what, record keeping. See, all of this is mentioned over here. Okay, readily retrievable form, client identification for an individual, for the entity, how you can do it. Do you need to write all of this in the examination also? Do you need to write all of this in the examination also? Tell me. See, this question is of 8 marks. Okay, you need to write the points and you need to explain it, but you do not need to explain it in such sense that what documents you will take and everything. You do not need to type the whole answer, but what you need to do, you need to mention all the critical points. For example, for CDD we have mentioned the years, right? For record keeping we have mentioned readily retrievable format. Okay, record of all transactions should be there in a full audit trail format. Then for individual, how you will identify the client. For entity, how you will identify the client. So for example, for as an individual, what you will do, you will identify through a driving license or passport supported by a recent utility bill. Utility bill could be the form of, example, electricity bill, right? Electricity bill. Is it mentioned in your study hub also? Yes. Why I have not mentioned it in my notes? Because those notes are for the purpose of understanding and revising also. Okay, if I write everything over there, that how do you identify, what documents you need to take, then it will become full textbook only, and it will become the equal boring stuff for you. Now, inspecting official documents with a photograph, establishing the client's full name and permanent address via driving license, passport, recent utility bill. For the entity, obtaining from the registrar of companies what, certificate of incorporation, company's registered address and a list of shareholders and directors. Once you take it, you have done the KYCs. Checking the names of new clients against list of known terrorists and other sanctioned information, that could be done. For trust, ascertaining the nature and purpose of the trust, the original source of funding, the identities of the trustees, controllers, principals, settlers and beneficiaries. Okay, for suspicious reporting, so prompt reporting of suspicion to the FIU in a suspicious transaction report, suspicious, STR. Okay, can you pronounce it as SAR also, suspicious activity report? Yes. Now, there should be no de minimis concessions. Reporting should be irrespective of the amount involved and whether tax matters are involved. That is, even if there are no tax matters, even if the amount is very small, then also you are required to report it, and it is something that you need to understand here. Okay, enhancing confidentiality of the source of reports, disclosing further information. And now, what are shell banks? So a shell bank is a bank incorporated in a jurisdiction in which it has no physical presence and which is unaffiliated with a regulated financial group. That is, a shell bank is one which is not affiliated, and where it has no physical presence also. So sometimes what happens is a bank might be operating in, say, India, and it is not subject to the requirements of India, but it is still operating in India. So that might be called as shell banks. Okay, I hope this is clear. So from all of this discussion, I would say that other than this, you should only get the definition of shell banks. Okay, from all the below discussions. What is the definition of shell banks? Jurisdiction in which it has operating in jurisdiction in which it has no physical presence plus it is unaffiliated. Okay, I hope this is clear. So with this, we have completed question 1 of money laundering also. Now let's quickly move to question number 2. Okay, it has a need for ethical guidance. We have already covered. Okay, you are a senior manager in design company or firm of chartered certified accountants. Recently, you have been assigned a specific responsibility for undertaking annual reviews of existing clients. Okay, and the following situations have arising in connection with 3 clients. Okay, this is a good question. This sounds like a good question. Let's read other questions and select one out of them, which would be a very cumbersome and a good question. So it is 1st July 2015. You are a manager. This kind of question is generally asked, so we can complete this one. This would be more fruitful for us. Okay, and then let's see the last one. So this is clean and company. Background information is given. Review notes are given. Okay, and requirement is of 25 marks. Okay, I would suggest we solve this question, okay, because this has a lot of interpretation, also identification related to what all activities are suspicious activities and all of that. So let's solve this question. Okay, clean company, question number 4. It is given under the additional questions part. Okay, but let's take a 2 minutes question. Let's take a 2 minutes break before we solve this question, because this question will take roughly 20 to 25 minutes to solve. Once we solve this question, we can close today's session. Okay, but my friends, before we move further, I would like to tell you that if you want, because today is the last class of our ACCA AAA subject on YouTube. So if you want to connect with me, on YouTube or Insta, I have the same username over there, which is ACCA with CA Supreet Agrawal. Okay, all the links are attached in the description also. You can refer that also. If you want to connect with me on Telegram, you should connect with me on CA. You should connect with me on ACCA with CA Supreet Agrawal. Okay, if you want to connect with me via lectures, so you can buy my lectures at www.bbvirtualsglobal.com. okay, that's how you can connect with me. Just in case if you have any queries, please feel free to connect with me. Now let's take a 2 to 3 minutes break, and then we will start with this question. This is a big question, will take roughly 20 to 25 minutes to solve. Okay, thank you. Okay, so now let's solve the next question, which is clean company. Okay, so it is 1st July 2015. I hope I am audible to everybody. Yes, it is 1st July 2015. You are an audit manager in Thomason and Company, a firm of chartered certified accountants. Okay, you have recently been assigned to the audit of clean company for the year ended 31st March 2015. Clean company is an unlisted company and has been an audit client of your firm for a number of years. Okay, so we are standing at 1st July. That is something that you need to understand. Okay, for the year ended 31st March 2015. Okay, so that is year already went by or year end is about to come. Already went by. Okay, already completed. That is something that you need to note here. Already completed. Okay, already completed. That is something that you need to know. Okay, because there might be certain questions that might ask you to report or to perform your operations on a report for the year ending, that is going to come later. Now, the following exhibits provide information relevant to the question. Background, information about clean company and its trading activities, that is first exhibit. Then review notes, details of issues noted during your review of the audit working papers for clean company, we will see that. Then this information should be used to answer the question requirements. So exhibit 1 is there and exhibit 2 is there, and then we will answer the question. This question is of what? 25 marks, requirements of total 25 marks. So you can understand that this question might have been asked in the examination also, and this is the exam question also, because this is the full-fledged question of money laundering, right? Now, clean company is a national distributor of cleaning products, or I'll not highlight it, I'll only highlight the relevant pointers. Okay, so clean company is a national distributor of cleaning products, national distributor. The company buys the cleaning products from wholesalers and employs a team of approximately 750 sales staff. Team is of approximately 750 sales staff around the country who sell the company's products to both domestic households and small to medium sized businesses. Both domestic households and small to medium sized businesses. They do not deal with large businesses as of now. Okay, around 75% of clean company's sales transactions are cash based, 75% cash based, and each of the company's sales staff prepares a cash sales report on a monthly basis. Cash sales reports on a monthly basis. According to clean companies Chief Executive Simon Blackers, and in order to foster an entrepreneurial spirit amongst his staff, each staff member, including the senior management team, is encouraged to make cash sales and is paid on a commission basis to sell the company's product. Encouraged to make cash sales, okay, encouraged to make cash sales, not credit sales, and paid on a commission basis to sell the company's products to friends and family. That is, they get the commission also, okay, to develop the entrepreneurial spirit. Mr. Blackers leads the way with this scheme and recently sold cleaning products with a value of £33,000 to a business associate of his. Okay, he recently sold cleaning products with a value of £33,000 to a business associate of his. Okay, he has transferred these funds directly into an offshore bank account in the company's name on which he is the sole signatory. Offshore bank account in the company's name on which he is the sole signatory. Okay, there's no other company signatory that is there, and he has transferred in company's name. Now, review notes. Your review notes of the audit working papers and an initial meeting with Mr. Blackers have identified the following potential issues. You are what? You are the audit manager. Okay, so you have the review notes. Okay, let's see. Following your review of the audit engagement letter and the working papers of the income tax section of the audit file, you have established that Thomason and Company performed the tax computation for clean company. Thomason and Company performed the tax computation for clean company and completed the tax returns for both the company and the Mr. Blackers personally. Okay, Thomason and Company as in the audit firm. All of the tax services have been invoiced to clean company as part of the total fee for the audit and professional services. All of the tax services have been invoiced to clean company as part of the total fee for the audit and professional services. That is, it has been mentioned together. Mr. Blackers personal tax returns. Okay, see here. Let's read the point. A firm charter, you have recently been assigned to the audit of clean company. Okay, and what you have done? You have already filed the tax returns also. Okay, of the company as well as the Mr. Blacker. So there is significant non-audit service also. Mr. Blacker's personal tax return includes a significant number of transactions involving the purchase and sale of properties in various international locations. Significant number of transactions, purchase and sale of properties in international locations. The tax working papers includes a detailed review of number of offshore bank accounts in Mr. Blacker's name, which identified the property transactions. Okay. During your initial meeting with Mr. Blackers, he informed you that Clean Company is planning to develop a new website in order to offer online sales to its customers. He has asked Thomason and Company to provide assistance with the design and implementation of the website and online sales system. To provide assistance with the website and sales system, online sales system. But who is he asking to? He's asking to the auditors. Okay. As a result of your audit review, see, there might be certain pointers that might come from certain other chapters. Okay. But whenever it comes, I'll tell you that this we will be discussing in this particular chapter, and no worries about it. That should not stop us from solving the questions. Otherwise, we'll never be able to start, right? As a result of your audit review visit at the client's premises, you have learned that the audit team was invited to and subsequently attended Clean Company's annual office party also. Oh my god, this is something that is coming from ethics also, that you have attended the company's annual office party also. The client provided each member of the team with a free voucher worth 30 pounds, okay, which could be redeemed at the venue during the party. The audit senior Paula Metcalf, who has worked on the audit for the last 3 years, has informed you that the audit team has always been encouraged to attend the party in order to develop good client relations. So is it developing good client relation, or is it an ethical dilemma? We will discuss about it. Now let's discuss about the questions. Here. So first question is, discuss the policies and procedure which Thomas and Company should have in relation to an anti-money laundering program. Okay. Thomas and Company, that is the client company, should have in relation to anti-money laundering program. This is a simple question, we can directly read. Evaluate whether there are indicators of money laundering activities by either clean company or its staff. Yes, there are, right? Okay, so let's first discuss this, that a lot of students make this mistake, that Thomason and Company is the auditor, clean company is the client. I have seen some students making this mistake also, that they forget that who is the client, who is the auditor. So you should be very clear in your approach. Okay. Evaluate whether there are any indicators of money laundering activities by either clean company or its staff, and comment on the ethical. Okay, comment on the ethical. See, first two questions are directed towards money laundering only. See, money laundering program, see money laundering, right? But third question, comment on the ethical and professional issues arising from your review of the audit working papers and recommend any action which should now be taken by Thomason and Company. Professional marks will be awarded for the demonstration of skill. What are 4 skills? Analysis and evaluation, professional skepticism, this is professional skepticism, judgment, commercial acumen. Okay, that is very important for all of us to understand. Anybody who is available on the chat box, please let me know you are available. So that we can discuss also. If you are available on the chat box, please let me know that you are available on the chat box so that we can discuss also. Yes, what do you say? Okay, so I hope this is a good discussion. Let's solve the first question first. Discuss the policies and procedure with Thomas and Company. Thomas and Company as in what? The auditor. Okay, the auditor should have in relation to an anti-money laundering program. So, policies and procedures. Thomas and Company should have established an anti-money laundering AML program within the firm. Anti-money laundering AML program that we have discussed about. As part of this program, we have just discussed in question number 1 also, and we have discussed today also from the study text also. As part of this program, the firm should have appointed a money laundering reporting officer. Number 1 point, with an appropriate level of experience and seniority. The audit firm should also have established internal reporting lines which should be followed to report any suspicion. Establish internal reporting lines. Point number 2. Thomas and Company, do you need to follow the exact same words? No. Do you need to follow the keywords? Yes. For example, if it is internal reporting lines, you have to write it. If it is anti-money laundering program, you have to write it. Otherwise, you can change the sentences. Now, Thomas and Company will probably have a standard form which should be used to report suspicions of money laundering. The standard form should be there. So, third point. Okay. Staff should receive appropriate training on compliance with the AML. So, that is fourth point. And how to report issues to the MLRO. The typical content of an internal report on suspected money laundering may include the name of the suspect, what should be the inclusions. So this is fifth point. Okay, what are inclusions? The amounts potentially involved, the reasons for the suspicious with supporting evidence if possible, and the whereabouts of the laundered cash. Okay, if you are aware about it, you should report this information. That should be the content of what? Content of SAR, suspicious activity report. Okay. The firm's internal policy should have been set up to ensure that all pertinent information is captured in this standardized report. Any individual in the audit firm who has suspicions of money laundering activities is then required to disclose these suspicions to the MLRO. Repeated point. The report must be done as soon as possible, as any non-disclosure or failure to report such suspicion will constitute an offence under the money laundering regulations. This is also general, that if you do not report, it would constitute a criminal offence under money laundering provision. On receipt of the internal report, the MLRO must consider all of the circumstances surrounding the suspicion. The MLRO must consider. See, the question was what? The question was plain and simple. The question was discuss the policies and procedure which Thomas and Company should have in relation to any money laundering program. So, will this point form part of it? Yes. The MLRO must consider all of the circumstances surrounding the suspicions of money laundering activities, document this process, and decide whether to report the suspicion to the National Crime Agency. So, which point is this? This is the 6th point. Okay. The audit firm has a legal duty to report, even though this may conflict with the auditor's duty of confidentiality. You have a legal duty, because we say no, that you can only breach confidentiality when it is required by law. So, in this case, it is required by law. So, that is why this becomes your point number 7. Now, there is a tutorial note that you can not read now. That is not an issue. Now, second point, evaluate whether there are any indicators of money laundering activities by either clean company or its staff. There are so many, the offshore transaction, the offshore purchases, where he is the sole signatory. There are so many, right? However, let's read it now. So, evaluation of possible indicators of money laundering activities. See, this is very, very important. This is very, very important for all of us to understand. Okay, but let's first discuss about when the third answer would start. Okay, let's first separate the third answer. Comment on the ethical and professional issues arising from the. Okay, this is evaluate whether there are indicators of money laundering activities by either clean staff or company. Okay, so this is the second part, and when we go to the B part, that is starting from here. Okay, ethical and professional issues. Okay, so we have completed as of now this part. Okay, now we are moving towards this part, and then we will move towards this part. Okay. So now, money laundering is the process by which criminals attempt to conceal the true origin. The definition part, this is just the definition. Okay, in the case of clean company, the circumstances which may be indicative of money laundering activities include the following. Number 1, cash intensive business, because 75% of the sales is made in cash and incentives are also given. So, clean company has a high level of cash based sales and a high volume of individual sales report. Individual sales report as in the commission reports. The nature of its business therefore creates a significant risk that illicit cash funds are being passed off as legitimate sales. More specifically, Mr. Blacker's sales to a business associate for 33,000, it was not dollars, it was pounds. Okay, pounds may be an example of the placement of illegal funds in order to legitimize them as genuine sales, because this is cash sales. So sometimes it would be a little difficult to identify the sources also. So what Mr. Blacker could do, Mr. Blacker could say that we have sold in cash, however this might be the cash from the source of illegitimate source, right? Maybe an example. Now, the size of the transaction in a business selling cleaning products and the round sum amount may be additional grounds for suspicion in relation to this transaction. Let's read it again. The size of the transaction in a business selling cleaning products and the round sum amount may be additional grounds for suspicion in relation to, because there's no clear boundary of which business has sold what amount. Now, international property transaction, we have discussed it earlier also. International property transaction is a big risk here. So, the performance of Mr. Blacker's personal tax computation has identified a significant number of transactions involving the purchase and sale of properties in international locations. These transactions may be examples of real estate laundering, by Mr. Blacker's in his personal affairs. It is possible that he may be purchasing these properties with illegal funds, that is placement, and then selling them in order to make funds appear legitimate, that is integration, and a high volume of such transaction may be indicative of layering, that is he has tried to layer the transaction. So what they are trying to say, when they are placing it, when they are buying it, it might be an example of placement. When they are doing it again and again, it might be an example of layering, and when they are selling and bringing the cash back to the country, it might be an example of integration, okay, of transaction in an attempt to make the original source of the funds more difficult to trace. So with this, we have solved this part of the question. Now we will solve part B, which is comment on the ethical. So these questions were of 4 marks each. Now let us go to the main part, where we are saying comment on the ethical and professional issues arising from your review of the audit working papers and recommend any action which should now be taken by Thomas and Company. Okay, so see, ethical and professional issues are there, no? Number one is tax services. Okay. Number two is Mr. Blacker's personal tax computation that we highlighted that time only, right? Then there is office party, right? Then there's office party, that is very, very important over here. Okay, so I hope this is clear. I hope this is clear. The website and online sales business also. Okay, now let's try to understand this. So number one, let's talk about the tax services, okay, in which company tax computation is there and Mr. Blacker's tax computation is there. Then there's website and online sales system because they want to take non-audit services from you, and then the office party. These are three ethical issues that we need to throw much light on. So company tax computation, let's just read it and we'll highlight if there are any important pointers. So the performance of the company's income tax computation creates a self-review thread. Why I am reading so fast? Because these are just general English pointers which do not need much reflection. However, if there would be any point that we have not discussed, I'll stop, I'll explain it, and then we will move further. So the performance of the company's income tax computation creates a self-review thread. Yes, this we will be covering under professional ethics. Okay, in next class mostly we will be taking professional ethics. Okay, so we will be covering that, what are professional ethics. In the meantime, if you want to see it, you can go to my YouTube channel, which is ACCA with CA Supreet Agrawal, and you will find one video of the professional ethics over there from the AA syllabus, and that would be same as AAA and AA. Okay, now only the details would be more in AAA. Other than that, it is similar. Now self-review thread arises when an auditor reviews work which they themselves have previously performed. As a result, there is a risk that the auditor will not be sufficiently objective in performing the audit. That is, they are reviewing. What is the meaning of this one? When I'll explain this self-review thread to know, then it means reviewing the work done by themselves. Reviewing the work done by themselves. That is, they are doing what? They are reviewing the work that is done by themselves only. Okay. We will be able to understand it in a little better manner when we will be completing the professional ethics. However, right now if I tell you that they have only prepared the tax returns and then they are only auditing, don't you think this will create a little trouble? This will create a lot of issues. Okay. Now, an advocacy threat arises when the auditor is asked to promote or represent their client in some way. Again, chapter again, this is part of professional ethics, second threat. Okay, professional ethics. One is self-review, another one is advocacy threat here. Okay, when the auditor is in a position to promote the ideas of the client. So an advocacy threat arises when the auditor is asked to promote or represent their client in some way. In this situation, there is a risk of the auditor being seen to promote the interest of clean company with a third party such as the tax authorities, and therefore the auditor will be biased in favor of the client and it cannot be completely objective, because what you are doing is you are representing, just like you are performing as an advocate for the client. Okay, now your interests are that this client should win. Okay, this client should win this battle, and now in this case, will you be objective? No. Objective means what? Objective means the unbiased approach. Will you be able to be completely objective? Will you be able to be completely objective? No, you will not be able to be completely objective. You will be in a position of bias. You will be in a position of bias. So objective means unbiased. According to the ISBA's Code of Ethics for Professional Accountants, however, completing tax return does not generally create a threat to the independence. See, this is important line. According to the ISBA Code of Ethics that we will discuss about it. However, completing tax return does not generally create a threat to independence provided management takes responsibility for the returns, including any judgments which have been made. See, here we were talking about advocacy, but here we are talking about just tax returns because of no representation. As no representation, where tax calculations have been prepared by the auditor for the purpose of preparing accounting entries. The code states that this may be acceptable for an unlisted audit client. And that the firm should consider implementing safeguards in order to reduce the self-review thread to an acceptable level. In this case, these safeguards might have included, for example, using professionals who are not members of the audit team to prepare the tax computation. That is, they could have separate teams. We discussed, no? That is, separate teams together with independent senior or partner review of the work. That is independent review. Okay, now this is important. Therefore, given that clean company is an unlisted client, domiciliary company should ascertain which members of the staff perform the tax services and should review whether the threat to independence has been adequately assessed. What if the same members have performed the tax returns as well as the audit? Then it will be an issue and it should not be repeated and it should be reported appropriately. Now, Mr. Blacker's personal tax returns. I am talking about the personal tax returns of Mr. Blacker, the higher level authority. So, from an ethical perspective, there is no prohibition in the code on the preparation of personal tax returns for the directors of an audit client such as clean company. There is no issues. Okay, so no issues. So, no issues. However, in this case, the auditor should consider whether the preparation of Mr. Blacker's personal tax return may result in the auditor being associated with the criminal activities if the suspicions of money laundering activities noted above prove to be well founded. Okay, so however, in the case, the auditor should consider whether the preparation of Mr. Blacker's personal tax return may result in the auditor being associated with criminal activities because he has done a lot of offshore transactions which look suspicious. So, if it is, then auditor should not be assigned with it, auditor should not be working with it. The auditor should also consider the appropriateness of personal tax returns being billed to the company. Indeed, the preparation of Mr. Blacker's personal tax return may be a taxable benefit which should be included in a tax return, and the fee for this service may need to be reflected in the director's loan account with the company. That is what has been done. The payment for both the personal tax return of the director as well as the company has been billed to the company only. So now we need to see how this transaction has happened, if there is any clear boundary between the transaction of the personal person or the company or not. If not, then we have to report it appropriately. Then the second thing is website and online sales system. What has happened is, I'll just read it and highlight few pointers here. According to the code, providing services to an audit client involving the design of implementation of IT system will form a significant part of the internal control over financial reporting or general information which is significant to the accounting records of financial statements on which the firm will express an opinion constitutes a self-review threat. That is self-review threat. Again, you are preparing, you will be reviewing it, you will be coming and reviewing whether the information systems are working appropriately or not. A self-review threat arises when an auditor reviews work which they themselves have previously performed, like we have already discussed about it. Okay, as a result, there is a clear risk that the audit team may too readily place reliance on the system because they have already developed it. They are the ones who have developed it, so they will be relying towards it because they will be saying that there could not be any errors. For example, the audit team has developed the website and through their IT team. Now tell me that what are the chances that audit team will come and question this website? They might not question, right? And that might result into a big threat for the company and the ethics. Now with reference to clean company, therefore, it is clear that providing assistance, it is clear that providing assistance with the design and implementation of the website and online sales system will constitute a self-review threat, as the auditor will adjust sales figure which are generated by the system, and there is also a risk that the firm may assume a management responsibility if they become involved in making management decisions. What is management responsibility? Assuming management responsibility, end up doing the management's work, doing the management's work executive work. It also seems clear that the new online sales system, will be significant to the client's financial system and records. The code states that such a self-review threat may be too significant even for an unlisted client as the clean company unless appropriate safeguards are put in place. Okay. If the self-review threat cannot be reduced to an acceptable level or the engagement will result in the firm assuming a management responsibility, the service should not be provided. That is the case. Okay. Now the third and the last one, office party. The office party. So the code states that the client hospitality. See, that was a 30-pound pass, right? It's a big pass. So the code states that client hospitality, in this case the attendance at the office party by the audit team, may create a familiarity threat. We will be discussing about it under ethics, okay, and then you will be understanding it a little more better manner. But familiarity threat is what? Familiarity threat is when you are having too close relationship with a member of audit team or the client. So for client it is the audit team, for audit team it is the client. Okay, so from the audit team point of view, when we see if they have too close relationship with the management team, then this might create into a familiarity threat, because now you might not be able to report objectively on the report or take objective decisions. So family threat occurs when the auditor is too sympathetic or trusting of the client because of a close relationship with them. There is a risk, therefore, that as a result of attending the client office party, the auditor staff may be getting too close to the client staff, especially given that according to the audit senior, this practice has occurred every year. So now it was mentioned, no, it has been happening for 3 years now, and client intentionally asks you to come, right? So this is very, very important. Now client insists you also. So this close relationship may result in the audit team becoming less objective and less able to challenge explanations provided by the client. unless the value of such okay, let's read about the gifts first. A self-interest threat arises when the auditor derives a potential personal benefit from an audit client with reference to the office party. Therefore, the audit staff are receiving a direct financial benefit. Unless the value of such gifts is trivial as in nominal. Trivial as in what? Nominal. Unless the benefit amount is nominal and inconsequential, the self-interest rate would be too significant to mitigate with safeguards and the gift should not be accepted. The audit firm should consider introducing internal authorization procedures in order to ensure transparency. That is, audit firm should have internal procedures that whenever they will receive any gifts from the client, whether they should accept it or not, they should have an internal policy for that. In this case, the value of 30, it is not dollar again, it is pounds. It was mentioned in the question. Okay, so $30 per head does appear to be trivial, but the auditor might still consider declining the gifts in order to maintain a visible professional distance from a client which may be involved in criminal activities. Can they buy the pass and go? Then it depends whether it is open to the general public via the pass or not. If it is open to the general public via the pass, then there is no issue. However, if it is not open to general public and then you are getting the pass, then it might create a little disturbance in the scenario. Okay, so I hope this was a fruitful experience for you. Now, what we have discussed so far. So today we have discussed what? Today we have discussed chapter 1. We have fully completed it. There's nothing pending over there. Then we discussed about chapter 2. We discussed about it in full, completed, nothing is pending. Then we discussed about questions of chapter 1 and 2 from ACCA Study Hub. It is done. From ACCA Study Hub, it is done. Did we solve all questions? No. We solved 3 questions. There are total 6 questions considering chapter 1 and 2. So you need to solve for chapter 4. I would say for chapter 1, you need to solve 1 more question from Hub. Okay. And for chapter 2, you need to solve 2 more questions from the Hub. Should you do it? Yes, you should definitely do it. Okay. Can you ask me questions? Yes. Where you can ask me questions, so you can connect with me either on YouTube or Insta by the name of ACCA with CA Supreet Agrawal, or you can connect with me on my Telegram, ACCA with CA Supreet Agrawal. The links are being mentioned in the description box. You can feel free to reach out to me. Just in case, if you want to buy my courses, I would say that you have to come to our website by the name of www.bbvirtuals.com. Okay, and I would love to see you in the courses because this was our last session on YouTube. Now we will be conducting our classes from upcoming Saturday on our app as well as the website. Okay, so thank you so much. Thank you so much, and I really enjoyed working and teaching all of you. Okay, thank you.